the markets will remain flat till about 11 a.m. before they start hearing what the numbers are likely to do. Okay, let's focus on HDFC Bank, because Avni's top pick is also the heaviest weighted counter on the Nifty and the Bank Nifty. It's opening 42 rupees lower at 1600. This will improve for the better. What's doing well? It's TCS, 2% higher, 43.73. Let's look at Infosys, another index heavyweight, 9 rupees higher, 0.5% uptick, 18.17. And what about the big boy Reliance? Reliance for the moment is right there in front of you, 3012, 11.6 rupees higher. A very quick look at what's happening in the NSE 500 space, and then we'll head back to our guests. It's a really important day for markets today. Coforge came out with its earnings today. Initial reactions are negative. The counter is down 10% at 54.68, but this will improve for the better. Federal Bank takes it away, 5% higher, record high, 204. You have a green tick on Suzlon, 5% higher, 57.83. NMDC, Canfin Homes, Wipro, Natco Pharma, all up between 3.5%, 5%. We'll wait for pre-open to settle. It's a more important day for guests, and I believe Mr. Manish Dangi, CEO and founder for Mosaic Asset Management, is with us. A very good morning to you, Manish. And I went through that lovely 6-paging document that you sent us in terms of your thoughts and expectations from the budget. Let's start right at the top. Your expectations on the fiscal deficit number. Do you think the government has enough fiscal space to be both populist as well as prudent?
Hi, good morning. So, yeah, there is a bounty of about 0.5% of GDP, which is pretty significant. In numbers, it runs into 1.5 lakh crore. And that could be deployed in doing everything that you need. 1.5 lakh crore, though for a very large economy, not that big, but still can do magic. So it can be populist, and it can certainly consolidate a little more than what was told to us in Feb budget. So both are possible.
Okay, so you are referring to the extra dividend that the Reserve Bank of India has given to the central government, plus buoyant GST, buoyant income tax numbers, as well as on the corporate tax part. What, according to you, are 2 or 3 pain points that the finance minister has on our radar, and she'd like to address them in the forthcoming budget?
I think, the biggest pain from a budgeting exercise is that Indian nominal GDP growth has actually slowed. Considerably. Now, see, for instance, understand that, let's say, even after GFC, which is 2008 crisis, India had a major fiscal response, but the public debt to GDP did not rise because the nominal GDP was in teens then, because inflation itself was in teens, actually. And therefore, what happened, of course, is that even after a very high fiscal deficit for a couple of years, we had high inflation, high nominal GDP, and therefore debt to GDP came down. Now in India, after the COVID, our response wasn't as big, and but it was in the form that inflation stayed relatively depressed. Therefore, GDP's rise in nominal terms was not as substantial.
Okay.
And debt to GDP actually has stayed high. So it was 72% before COVID, and now it's 82% and stagnated there. So I think from a major macroeconomic challenge, low nominal GDP growth and high public debt to GDP is the reason why, finance minister will not have a wiggle room at any point in time, let's say, if there were to be another crisis, So that sort of would, if I were her, I would always be worried that, do I have space to actually re-stimulate it just in case of a need?
Okay. Ladies and gentlemen, this is the biggest day for the budget, and the best lineup of speakers is with us. It's a crisis of plenty. Welcoming Devin Choksi, Devin Bhai, MD at DR Choksi FinServe, and of course, our very dear friend Manish Sonthalia, Chief Investment Officer at MK Investment Managers. And within the studio, we also have Sakshi getting mic'd up. Devin Bhai, coming to you. What are you looking forward to in the budget? It's going to be a balancing act. Do you think populism will win, or will fiscal prudence and the way the budget has been done for the last 3 or 4 occasions will find more support amongst bureaucrats and politicians? What's your thought?
Yeah, good morning, Shail. Well, I believe that I think the name of the game here would be the consistency and the growth. This government has demonstrated incredibly high amount of will to basically pursue the path of growth, and that's what I think one is expecting out of this budget as well. Economic survey has given couple of statements I think which are very clear as far as the intent is concerned. They want to bring the fiscal deficit back to 4.5% by FY26. So which means that interim budget which projected at 5.1% is basically being brought down in 2 years time to 4.5%. Does mean that I think they are significantly counting on higher amount of revenue on one side, and also they would probably be expanding larger amount of infrastructure projects I think which they have committed for. But in the most important statement along with that is I think they want to invite public-private partnership, which means that government is very mindful about I think stretching their financial resources. They do not want to unduly stretch the financial resources. At the same time, I think they want to invite the global capital, both in form of debt as well as in equity. And that is a reassuring statement as I see it currently. So in my viewpoint, I think the allocation of money as a priority would go towards infrastructure, where about I think 12.5 crore kind of a budget allocation would take place from interim budget of around 11.1 lakh crore. And at the same time, I think the PLI-based manufacturing for Make in India program at the same time should be, I think, be given the larger preference, with newer industrial segment, I think, getting included to PLI, including the chip manufacturing, among others. So I think to a greater extent, we believe that I think the spending on infrastructure, spending on manufacturing, and spending on agriculture, largely to create high amount of, I think, dependency on the food security business. So there the program is likely to be on the agriculture side. So we are clear about, I think, the job creation also simultaneously due to all these 3 focus areas.
Okay, 60 points higher on the Nifty, and infra is in top shape. Ultratech up 1.5%, Tata Steel up 1.2%, NTPC 1.2%, PPCL adding about a percentage point. Sakshi is with us. Good morning.
Good morning, Shail. You know, I was there, and good morning to Devin Bhai and also Manish joining right in. Warm welcome to both of you yet again. I was at the India Today studio since 7 a.m. and you know, they had this tagline that they were flashing: Naukri, Nifty and Nation. That is what they expect the budget to really focus on. And I want to understand from you, Devin Bhai, Naukri, Nation, Nifty, क्या चलेगा इस बार के बजट के बाद?
तीनों 3 चलेंगे, उसके अंदर कोई चिंता करने का जरूरत नहीं है, क्योंकि जैसे अभी हम बात कर रहे थे कि the amount of job creation which is basically expected out of all the 3 programs which the government has possibly emphasized on, be it agriculture, be it infrastructure, be it manufacturing. In each of the 3 programs, I think the underlying assumption is that the government will end up creating the larger amount of jobs, which is also being emphasized in the survey yesterday. So I think from a perspective of I think looking at the budget as a balanced one, I believe that it will lay down the path for next 5 years easily, which would possibly be continuing on the program that they have already announced. But at the same time, they are expected to increase the PLI bandwidth to a greater extent, I think including some other sectors in allocation of money therein. So that is one area which I believe going to be taking the prominent move from the government side. As far as I think the Nifty is concerned, Nifty is a byproduct of I think the government's economic policy and the outcome out of that. So Nifty, even though there may be some sort of correction here and there, would probably show higher path going forward in next 3.5, 4 years time, wherein one could expect that in 5 years time, I think Nifty could be doubled from current level than what it is at this point of time. So certainly, I think we are expecting both the Naukri as well as the Nifty. I guess I think both of them are probably taken care of, I think, in the course of time by the government's policies.
Right. Manishji, let me bring you into the conversation as well. Tell me, what could be a make or break in this budget and in this budget speech for the markets, for the economy?
I don't think there is a space to do a lot of break now. At this stage, of course, for equity markets, a disappointment could come from in the form of capital gain tax. I think there will be disappointment. But for economy at large, and I think the macro is chugging along. You got one of the best macros since early 2000s.
Correct.
Less than 1% CAD, run rate of core inflation at less than 3%. Fiscal deficit. You're arguing that the any shadow of fiscal deficit is negligent. PSU entities are not borrowing, so there is a lot of space almost everywhere to actually raise money. So in a sense, budget typically is a revenue versus expense, and I guess there is enough revenue flowing in to spend. And
I'll interrupt you just for 30 seconds, Manish ji. That's the finance minister showing us the Bahi Khata, the tablet in the red cover, visuals coming in from North Block outside the finance ministry right here. She's also clad in white and red with that red cover of the tablet complementing her as well. Smiles all the way. The entire team that has been behind the construction of the budget this time around. You do see key finance ministry officials right here, right behind her. All smiles and confidence displayed on their faces. You have some important people right there. CEA V. Ananta Nageshwaran. You also have the Secretary Finance, Dr. T.V. Somanathan, Secretary DEA Ajay Seth, Secretary Revenue. You also have Sanjay Malhotra, Chairman CBDT, Ravi Agarwal, Chairman CBIC, Sanjay Kumar Agarwal, all of them behind Finance Minister Nirmala Sitharaman, and the wait is only going to be much shorter now for us to really see the budget speech at 11 a.m.
Right, ladies and gentlemen, and from here the finance minister proceeds to the parliament where she'll present a concise copy of the budget proposals to her cabinet members and of course to Prime Minister Narendra Modi, and then we'll see her proceeding to the main hall of the parliament. But till then and now we have Mr. Manish Sonthalia joining us. He is the Chief Investment Officer at MK Investment Managers and a very long-term watcher of the markets. Good morning, Manish. A very warm welcome on Market Today. A couple of sectors you think will be benefited from the budget speech about 1.5 hours from now?
So I think a fine balancing act is required between capital expenditure and revenue expenditure. I think some measures to have some money in the hands of consumers is the need of the hour, and there'll be a lot of proposals that would be watched at primarily from a taxation point of view, because that would imply leaving some money in the hands of consumers. So some increase in the exempted tax slab would be watched out for. In terms of housing, I am expecting some big announcements, because government has actually alluded to the fact that affordable housing, which is PMAI, would get a good boost. Apart from this, capital expenditure would include your flagship expenditures in, let's say, railways, defense, infrastructure, renewables, power. These would be par the course. I mean, it's very much expected that there will be an impetus given out. But key to watch out for would be some of these sectors, basically your industrials, would be your consumption, housing, infrastructure. These would be some of the sectors to watch out for.
Right. We'll also get into the conversation with Manish Tangi also right here. Manish ji, as the markets have settled, 1 minute to go for the markets to open, all the sectors into the green. So we are going into the budget speech with a high hope right there. 0.25% uptick on the Nifty and about a 0.4% uptick on the Nifty Bank. You tell us 3 key sectors that could benefit the most from the upcoming budget, and anywhere that you could actually see, an adverse effect coming in.
So I think from a theme standpoint, I agree with Manish there that it's likely that incrementally an impulse for rural versus urban, and a proxy of that will be FMCG over discretionary. I think global cyclical slowdown outside of US has already played out significantly. With I think global cyclicals such as IT would do better than local cyclicals. So my portfolios, would invariably somewhat different from say right now people who are actually thinking super India bull, because I'm watching, as you said, Revex in India for last 2 years has been growing at only 4-5%, delivering very low core inflation. That typically, historically, has hurt margins. Now, hasn't happened so far, but it is a harbinger of a possibility that eventually margins will cave in. So, which is why, the places to hide in India are these, non-discretionary FMCG staples, global cyclicals and such likes, instead of sort of super local businesses like discretionary and industrials.
Okay. Sakshi, what we'll do is we'll just pay attention to the markets a bit. Remember, they're likely to be flat till the speed starts, and flat as flat can be. 58 points, a green tick on the Nifty, 24,564. Nifty Bank is up 100 points. The IT index in the green, as is the Nifty 500. Let's look at some stocks. HDFC Bank down about 4 rupees at 1638. Reliance at the moment is clicking 6 rupees higher, 3006.4. And what about Infosys in the green, about 2.6 rupees higher, 1814. It's a nice green tick. All 10 index heavyweights on the Nifty are right up there. Let's look at the ways how the most traded are tracking, and at the moment we'll try and pay attention to the PSU basket. You have RVNL clicking it up from the railway side, 1% higher, 629, 630 now. All of them are there. HAL, BHEL up about 1% each at 5,024 and 314 respectively. You have all the favorites, Sakshi. IRFC up 1.5%, Cochin Shipyard up 1%, Mazgaon up 2.6%, Railtel adding 538 at 2% higher. You have HUDCO as well, 0.5% higher. Again, ladies and gentlemen, it's going to be a PSU day. And apart from the 4 indices that we had mentioned, of the 19 we track, okay, all 19 are in the green. Let's look at what the NSE 500 is doing. 23,000 right there in front of you, up about 0.2%. Advanced decline is fairly good. 1,400 shares in the green, 470 in the red. Coming to Manish Sonthalia. Manish, you've mentioned housing as one of your favorite sectors. Within the infrastructure space, lot of expectations that the 11.11 lakh crore allocation that happened last year will see an augmentation. Any favorite stocks, sectors or themes that you'd like to play out on infra?
So I think, it would come to power as a major theme in the infrastructure space, which will require a lot of boost. Because if we are growing at 6.5–7%, we need energy security, and given the data center proliferation, etc., we'll be guzzling a lot of power, and probably in terms of securing that power requirement, I think a lot of impetus will be on renewables and the power space as a whole. In terms of the others, which is basically your defense and railways, it would be a continuation of what has been alluded to in the past. Allocations would be watched out for, and obviously the allocation to capital expenditure will depend a lot on what the revenue expectations are for this budget, in terms of what the real GDP plus the inflation, in terms of what the multiplier, in terms of how many times or what percentage of GDP growth will translate into revenue growth by way of taxes. That is all the maths that needs to be watched out for, and obviously one needs to keep an eye on the fiscal deficit. 5.1 is what the markets would like. Anything more than that is not warranted and would not be liked. So all this fine balancing act would be keenly watched.
Right. Let's get in Devin sir into the conversation. Devin sir, do tell us, what is on your top expectation? You may be looking at a wide sector-wide expectation, overall economy-wide. We've been discussing capex, infra outlay, everything. But what is your one top most expectation from the budget?
Well, I think undoubtedly within the infrastructure space, there is going to be, I think, emphasis coming up more on the front of the power generation, and that too within the renewable power. The focus would be on green hydrogen because India promises to be the world capital of green hydrogen with its electrolyzer technology adoption, which I believe is going to play a key role in bringing down the cost of the power. So government's focus for 2029 is going to bring down systematically and structurally bringing down the cost of the power. So that's where I think the larger amount of allocation of money towards the green hydrogen programs, which the government of India is basically wanting to carry out. And at the same time, I think the PSUs and particularly the oil PSUs are the ones who are likely to be allowed to set up their own companies or subsidiaries within them, for which I think this particular program will be carried out. So we are looking at, I think, the PLI allocation also on this particular front from the government. The second most important area where we see the distinct amount of possibility is inland waterways transport facilities, wherein I think the shipbuilding and inland water transportation is going to be given the extremely high amount of weightage, and that's where the allocation of money could increase along with I think the other areas which we have seen up till now. If in the previous cases, I think they had spent significant amount of time in creating the freight corridor. I think this time around it's going to be the turn for some of the inland transportation on the waterways front. That's where I think the larger allocation of money could take place. So keep watching out for a couple of these announcements as they see, I think, happening in this budget for the infrastructure segment in particular.
Okay, let's get Mr. Dangi his thoughts on the markets. Manish, a huge amount of run-up has happened, and we'll show you sectoral performances. The worst performing sector is FMCG, and even that index on a half-year basis is up 7%. Forget the rallies that we've seen on PSUs, on realty, on oil and gas, all up between 35 and 42% over the last 6 months. Now, as a stock picker, because all of us have to make money at the end of the year, where is your focus so far? You've mentioned in your documents that your research team is looking at specialty chemicals, but this is something that you don't understand on your own. Nevertheless, let's hear it out in terms of stock picks.
No, I would talk stocks, but in general, my view, and there is a conflict here because, people who watch technicals in my team, the ones who understand the micro dynamic of markets kind of see no reason to yet take a call that this is it. There is still very, very buoyancy that they can spot in the market in terms of volumes and the way vols are. And the way, I have to admit, and they themselves say that, the breadth has been reducing underneath, there is a turmoil in the market. And in a sense, what you invariably get from all investing teams, including mine, is the rotation that, anything that hasn't done well in last few months would potentially do well. Primarily, this happens, Chief, when there is a flood of money coming in and you're literally, as a fund manager or analyst, looking for a next opportunity, which you actually don't get in absolute terms, but invariably find that, okay, something that hasn't done well will eventually catch up. And this is how the chemical business also is being spotted by my team. Of course, last few years, pretty much like some of these private banks, IT, not done well. And, likely that there could be a mean reversion in terms of performance because rest of the sectors, most of the market otherwise are sort of super overheated. So it's a mean reversion trade.
Yeah.
I personally, as I said, I like global cyclicals and I like defensives in India, and FMCG happens to be one of it, which will actually at least defend well in case there were to be an Indian cyclical slowdown over next 6 to 12 months.
Okay, so the mosaic of the market, ladies and gentlemen, is in a shade of deep green, and that's simply because the monthly FII numbers, the very strong inflows of SIPs, ultra HNIs, HNIs and retailers hunting on a minute-by-minute basis to punt on markets. Now there is a crisis. We have two Manishas on the screen, so I'll stick to surnames. Coming to you, Mr. Sonthalia, you've been a stock picker. We've been speaking to each other for the last 3 decades or so, and you've created enough and more wealth for all your unit holders and PMS customers. Where is your sight and what is on your radar?
I think one space which is quite overlooked and I think is not yet priced in, is the housing space. It has gone through some correction, and I think this year, housing as a theme would be performing, and all aspects of housing, whether it be finance, housing finance, whether it be cement, whether it be tiles, plyboards, paints, etc. I mean, you can take your picks in each of these spaces, but I think this is one theme that needs quite a bit of watching. And the second is basically your BFSI. I think there will be some announcement when it comes to the problem of deposit mobilization, ATC deduction, etc., which was taken away, might come back because the sector is grappling with shortage of deposit, and of course it's quite an undervalued sector, so to speak. If India has to grow at 6-7% for the next 5 years, you can't imagine that if there's not smooth flow of credit through banks, and if LDRs are a constant concern, then those targets would be quite difficult. So from that point of view, I think banking and housing, these would be the two themes that I would be watching out in the budget very, very closely. Rest of the sector, there will be allocations, but capital goods, defense, railway, they are priced to perfection for the next 5 years of earnings, I would believe.
Okay, I'm going to continue with my gentle coaxing to get both Manish's, Mr. Dangi and Mr. Sonthalia to come up with stock ideas. But meantime, we'll have Sakshi on the main screen. And ladies and gentlemen, there's going to be a plethora of data that Business Today Television has prepared for you before the budget comes online. And there she goes.
Absolutely, Shail. A whole host of numbers that we'll be watching out for in the budget speech. Of course, the first one will be on the growth figure, on the GDP factor. Already in the economic survey, a 6.5 to 7% expectation has been set. But if we look at the kind of figures that we are looking at on the GDP front, I will just show you on the budget dashboard that we prepared for all our viewers. You remember from the time of COVID-19 when the GDP had crashed, we've actually seen a stable economy emerging over the last few years. We are at a stable footing at 6.8%. Remember, we got that big, bonanza figure of 8.2% for FY24. Now the expectations are set for 6.5 to 7%. But the big question right now is that this growth in the economy, the big criticism that the government has been facing is that it is unequal. You do see a K-shaped recovery that's been happening, and that is one thing that the government really needs to address, whether this will be an inclusive growth that they will actually propel with the upcoming budget. The second important figure that we are going to be looking at is also from the inflationary aspect as well. Remember, inflation has been sticky. Food inflation is something that is worrying the government at this point in time. They really need to come out with the agri reforms, something that can improve the agri infrastructure, the warehouse facilities, the storage facilities, the way the climate change is impacting harvest season, unseasonal rainfalls. That is something the government will really have to take note of. And because you've been seeing that the inflation has been inching down, can it cool off further is something that we'll be watching out for. Again, the government is very, very comfortable as far as the tax figures are concerned. Both on the direct side, there has been a comfortable inching from last FY21 to almost FY25 estimated. Look at the 22 lakh crore rupees odd that is expected in the upcoming budget as well. We are already at 20 lakh crore rupees, both on the direct as well as the indirect side. These tax collections are pretty buoyant as of now. The tax to GDP ratio also shows a continued stability at around 11.7. The big question is, what will the government really do of this revenue collection, of this tax collection? Now, will they deploy it meaningfully back into the economy, get the ball rolling and get the economy back on the glide path as far as the growth is concerned, Shail?
That, ladies and gentlemen, was the pictorial representation of what you might just see discussed in the forthcoming budget speech. Let's head back to the market. Flat as flat can be. Nifty up just 16 points. 10 points up on the Nifty 500. The bank is doing 64 points higher, and I'd just like to mention 4 stocks that have hit record highs. Federal Bank, ladies and gentlemen, 2.8% higher, 198.3. Godrej Consumer Products, 1474, 0.5% higher. The general insurance space is lit up by ICICI GI, 1904, up 0.5%. And from the specialty chemical space, we have PI Industries, 3994, up about 0.3%. Mr. Dangi, coming to you. This wonderful article of faith that retailers have put into the government as also the stock market is this SIP number now touching 21,000 crore rupees a month. Do you see this accelerating, and do you at the same point of time see this as keeping valuations frothy and fund managers such as you on their toes to pick up outperforming stocks?
This is the inertia, this is the momentum that market has right now. Investors have figured out a place to make the decent amount of wealth, and therefore it will continue. The way to assess whether it will continue or not is whether policymakers would respond against it. So see, look, it has come to a point where RBI, SEBI, even FinMin officers, yesterday Anand made this points that, look, we need banking deposits also to grow because it's an important source of capital. Now, I do not agree with this that capital markets and banking actually compete, because principally all the money in the capital market still sort of go, spill back into the banking, and therefore the deposit creation or deposit growth has got nothing to do with high SIP numbers. But be that as it may, the reality is that today the entire policy ecosystem is telling you that there is something excessive happening right now and must be sort of tamed. Now it's likely going to happen in the form of doing something to break the FNO bubble, but all you know is that some other measures are also taken, because I think there is a bit of a discomfort here.
Otherwise.
Right. Mr. Sonthalia, let me come to you now. I want to really understand, there is an argument going on that whether the government, which has now more money in its hands thanks to the collections on the taxes front from forex reserves or from the RBI, how should the government be really using this? Should one really look at a complete reduction on the fiscal deficit part? Will that make the markets more happy? Or should this money be deployed to spur consumption that has been faltering as of now? Where do you think the markets will be happiest, and how the money is deployed on this front, sir?
Markets would definitely be happy if the fiscal deficit target for FY25 is kept at 5.1%. Obviously, government has to do a fine balancing act between revenue and capital expenditure. Markets won't be pleased if the numbers go beyond 6, and that was the last year's figure. But I don't think there is any requirement for that sort of fiscal deficit to be maintained. We are in good times, and I think the government should use that opportunity to bring down fiscal deficit targets in line with the FRBM Act. In that backdrop, I think some leeway in terms of relaxation of taxes for the middle class would definitely help and cheer the markets, because there will be more spending that would happen. Consumption does require some boost. The rural folk, the middle class, the urban middle class are all reeling under the yoke of inflation as well as high taxes. So some leeway out there would be very, very helpful from a sentiment point of view. And at the same time, I think to propel capital formation, the momentum, as has been seen in the economic survey, capital formation at 9% incremental last year was very good, and I think that momentum needs to be maintained. How the government is going to balance disinvestment, because there have been some statements that we are not looking at disinvestment, no need to form targets because you really don't collect anything. So I think that is another space that would be needed to watch. Non-revenue receipts, which is basically a capital receipt. How the government is going to fund non-revenue receipts. So I think this is where the entire focus would be. And in this whole backdrop, some announcements on housing would also definitely help.
Right. We'll also get in Mr. Dangi into the conversation now. A big thing on everybody's mind right now is whether there could be any tinkering of taxes on capital gains front or on F&O, something that has been spelled out by the SEBI chairperson and yesterday in the economic survey as well. Do you expect to see some tinkering on that fact? And in case something of that sort comes, how will the markets react to it?
So I'll be surprised if nothing is there. It's just that, these two are conflicting choices, doing capital gain tax as well as FNO. So I guess if the primary function is to sort of tame the speculative activity, given the fact that near 90-95% of the people end up losing money in those trades, unskilled that they are in this craft, I guess something ought to be there. And then that does not sit really well with higher capital gain tax. So I guess if something will be there, more likely towards FNO. It may very well be handled by SEBI, and a general sort of a remark could be there from Finance Ministry as well as an instruction. But I would be very surprised over the next 3 months, significant measures of policies are not rolled out to tame the FNO activity in India.
At that point, Sakshi, at this point of time, we are the largest derivatives market in the world.
Yeah.
Even though the comparison between Indian stock markets and Wall Street is David versus Goliath, but that's the frenetic level of options activity that we are seeing in India. Staying with you, Mr. Dangi, one question that I have in mind is at the opposite ends of the spectrum. What are you not looking at in terms of creating value for your unit holders in the PMS scheme? And what are you looking at in terms of sectors where you are busy picking stocks?
Listen, as I said, at this stage, last time also we discussed, the most profitable trade in town is actually low inflation, low nominal GDP, and therefore low rates. And so it's very likely, in my view, that a long bond in India over the next 2 years would perform somewhat close or better than Nifty. That's my big picture view. Basically, a 10-year bond at 7% once bought, and if the rates head to 6% or below, which I think they will, in fact, they may head to 5.5%, you will end up earning 10-12%, and you're not going to earn more than that in Nifty. Second, I think that Indian balance sheet is a better place to bet on instead of Indian P&L. So corporate margins are at multi-year high. They will very likely sort of go down from here, and therefore there will be disappointment on that. But on the P&L side, but I think the balance sheets are so strong and they take a lot longer to decay. So a credit is a better way to play corporate balance sheets than corporate than balance sheets. So therefore, you can invest in credit portfolios. Sectors we've already discussed, so I won't repeat them.
No.
Okay, that, Mr. Dangi, is enough fodder for the next interview that we'll be doing for you. Thank you so much for your time, and it's been an excellent 45 minutes understanding the best macro ever, and of course how to play it in the markets. We now welcome Mr. Mahesh Patil, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Good morning to you, Mahesh, and a very warm welcome.
Yeah.
Your first and two major expectations on the macro side as far as the forthcoming budget speech is concerned. How do you feel?
Yeah. Good morning. Morning. I think today is the big day again, as the market expects. So I think in this budget, as what we saw in the interim budget, I think clearly, I think the path towards fiscal consolidation, I think that is clearly on the way. We don't see any deviation from that. Okay, I think that will continue. At the same time, I think we've seen the last 2-3 years, right, post the pandemic, the focus has been in terms of trying to stimulate the investment, trying to address, okay, the supply side, okay, of the market, because we had inflation also, okay, which was a big concern earlier. Now, inflation is thankfully under control. Okay, we're seeing macro stability. I think this is the time where the government could try to stimulate on the demand side. And we've seen that while the economic recovery has been good and the overall GDP growth, okay, for last year was healthy. And this year also we expect around 6.5% kind of a GDP growth. There are a few pockets in the economy which are still yet to recover, and primarily on the consumption side, okay, which is still lagging probably the pre-COVID trend which was there, while investments has caught up with the pre-COVID trajectory. So we could see the government trying to stimulate one is the consumption, especially at the bottom of the pyramid, right? Okay, in terms of some kind of tax cuts, okay, which could be there. Also, the rural economy has been recovering slowly, but not to its full potential, and some support to that, okay, could be seen in this budget, is what I think. So a bit of some social measures, I think some balance, I think, okay, to have stimulate the consumption at the demand side of the economy could also be seen in this budget, is what one can expect.
Right. Mr. Patil, very good morning to you. I want to understand one thing. Why this budget has a different context is because this comes right after elections where the BJP has lost majority. It is an NDA-led government. There are coalition pressures that they are going to be facing, which something was absent over the last 10 years of their governance in the country, where they have largely stayed on the fiscally prudent path. Will that change with the current budget? Do you see a risk of tilting towards populism at this point in time, something that they may have to even listen to the allies and their demands, something that may not be as fiscally prudent this time around? Is that a risk?
I mean, looking at what the government, the intentions are, and also in the economy, so I don't think the government will really budge from its path, okay, what it had chosen in terms of trying to ensure there's macro stability. And they did a good job both on the monetary as well as on the fiscal side. And I think will continue. The good thing is that this time around, the government has got some fiscal room because of the large RBI dividend which has come in, okay, which is almost this time it is 0.6% of GDP higher than what it was earlier. So that gives us some room for the government to really utilize that proceeds, okay, for doing some social welfare measures, okay, to bring some, as I said, to stimulate the consumption side. But apart from that, I don't think this government is going to deviate from the earlier path what it has chosen. I think targeting inflation, okay, which RBI has also said that, okay, will remain their priority. And I don't see that that should, election outcome also, while we've seen that the government hasn't come with an absolute majority, but clearly I think they are still a dominant force, okay, in the coalition. And while they will have to take up, okay, I think this time probably we would see, the budget, while we talk about the central, but the states, how they spend their budget, I think is equally important, right? So probably the devolution on the states, okay, one can see some increase over there. But I don't see any major risk to the government's path, okay, what we've seen in the earlier budget. I think it will probably be a continuation of that.
Okay, let's take this discussion a little forward, and in a while, a very dear guest and friend will be miking up in the studios. We'll introduce to her shortly. Till the time the mics and the earpieces are in place. Mr. Patil, I have in front of me your best performing and largest fund at the AMC, which is Aditya Birla Sun Life Frontline Equity. About 24,000 crores is what is managed under the direct plan. I'm just looking at the portfolio, and I look at very strong weightages on private sector banking. The guest before you was talking about the strong Indian balance sheet that is in place, and of course credit might be the best place to make decent long-term capital appreciation. Would you want to comment on the private banking space at this point of time from the point of view of valuations?
Yeah, so the banking sector, if you look at, has had last year was a good year for the banking system. We had pretty strong credit growth. Credit costs, okay, which is also another important factor which impacts profitability, was also at an all-time low. Thanks to the corporate balance sheets are in a much healthy shape currently at this point in time. We've seen the big deleveraging has happened in the corporate balance sheet side, and also the retail credit has behaved still very well, though there are some pockets, okay, where some caution has been raised by the RBI, especially on the unsecured lending, which is being monitored very, very closely. But by and large, we think that the banking sector, which is a proxy to the economy is likely to grow at a healthy pace. You will see steady, good credit growth. However, the large uh, margin improvement, what we saw last year, because in an environment when interest rates went up, I think that is going to slightly moderate. But overall, we see that the banking sector should do reasonably well. The private banks, okay, especially within the whole banking space, have relatively underperformed, right? In the last one year, we've seen the PSU banks do much better because they've seen a re-rating on the back of good numbers. Okay, we've seen good profit growth on the back of low credit cost. But I think going forward, if I take a slightly medium to long-term view, then the private banks have a better chance of compounding their earnings from here on. Overall valuations also, if you look at the large private banks, they are compared to the broader market valuations, which are slightly higher than the long-term average. I think for the private banks, it will be somewhere closer to the long-term average. So valuations are not really expensive, and overall, we don't see any major stress. Okay, either on the corporate side, even on the retail side. I think most of the private banks have been prudent in terms of managing the lending. They haven't taken excessive risk. So I would say that banking can be a sector, especially private banks, which can provide stability and can potentially outperform the market over the medium term.
Right, Mr. Patil, we'll also welcome into the conversation Mrs. Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors, now joining in here in the studios with us. Warm welcome to you, ma'am, and thank you so much for taking the time out and being with us here in our Noida studios as well. What a pleasure. We've been always discussing with you across geographies and on the Zoom links. It's so good to see you in person and on such an important day. You tell me, what is your top wish list from the Finance Minister today as an investor and as a stock market advisor?
Well, first of all, I think I'm quite pleased with the state of the Indian economy in general. It's very buoyant, it's in great shape in general compared to what I'm seeing in other economies. So I'm not really perturbed by anything really serious. The only thing I would say is that the rural sector continues to not do as well. So anything to make the growth more balanced, so that the income inequality that has developed gets a little bit less unequal. So to focus on the segments of the economy that have been on the weaker side would be what I would think would give a longer term sustainable, better future for India.
Which are the sectors that you feel are going to be benefiting the most after today's budget speech is presented?
Well, it's very difficult to know what they're going to announce, but I expect that there will be some initiatives that will help the overall agri sector, the youth, the employment, skilling. Some emphasis will be put on those. So I think companies, potentially FMCG, anything in the agri space, maybe some of the banking sector may also benefit as a ripple effect. So I think that sector is likely to be more positively impacted, assuming that they do announce some SOPs for those sectors.
So two market masters with us, ladies and gentlemen, Punita Kumar Sinha and Mahesh Patil, discussing what the forthcoming budget speech might hold. And as you may have noticed that both ladies have hit a purple patch.
And you're in the pink of health in between.
It's all the same.
You know, health is a touchy topic, but I'll still take it. So, Punita, a stock picker on my left, and Mahesh, another stock picker across the screen in the capital city with us. It's been a fabulous rally so far. Absolutely no points of complaining. As I have been mentioning repeatedly, the worst performing index is the FMCG index, and that too is up 7% over the last 6 months. Punita, to you first. You've always been a person who's deployed money in dependable long-term balance sheets where you see a margin of safety and you see a huge moat in terms of earnings. Even now, you see the large cap space which has relatively underperformed the fantastic rally in mid caps and small caps. How are you hunting for outperformers in markets today?
Well, first of all, I think it's important to be focused on value.
Yes.
Markets had become a bit frothy, and especially in the mid and small cap segment, SME segment, the crazy flows and the deals that were happening. I think it was showing some signs of risk. I think that now one will probably see some rotation into value. Depending on the budget, there may be some more of a last gasp rally in mid and small cap if there is something very growth focused. But in general, I would say that we've already started seeing, as you said, FMCG, rotation into IT, rotation into some of the laggards. I think those are the sectors that would be safer at the moment, given the valuation disparities.
Okay. And Mahesh, I was just going through your top performing fund as far as the portfolio is concerned. Of the top 20 stocks, I believe at least 17 are Nifty companies. There's just one small cap, Crompton Greaves, actually mid cap. Is there a concerted effort on your part and your team's part to look for value and relative undervaluation in this market, which is rocketing on a daily basis?
Yeah, so I think the fund which you're referring to is primarily a large cap focused fund. So you would see most of large cap. We have some mid caps, but there are two things what we are looking at this point in time, right, in terms of the strategy. Clearly, I think there has been some pockets of exuberance in the market. We have seen sharp rally in a few sectors where the valuations have probably gone ahead of our expectations and discounting too much distant in the future. We are trying to be cautious over there. Again, within the mid cap, large cap space, if you are a small cap, clearly the large cap stocks, the mega caps, is where we find relative valuation comfort, okay, in terms of risk reward. So our bias would be slightly more tilted towards large caps in the portfolio. That doesn't mean that we don't like mid cap and small cap, but becomes very, very stock specific over there. At the same time, I think this is a time to also play some contra, right? There are a few sectors, okay, which are probably underperformed because of whatever short-term concerns. And to the sectors, okay, especially if there are good companies in those sectors, is what we are looking at and trying to see if we can see a turnaround over there and trying to build exposure over there. So I think we've seen a large momentum trade play out in the market in the last 1.5 years, right? I think somewhere down the line, I think we're seeing it slightly try to be cautious over there, focus back on fundamentals and valuations, and find out relatively, okay, where one is seeing. I don't think there is absolute value in the market at this point in time, but relative value is what we are looking at and trying to align the portfolio over there. At the same time, also trying to ensure that companies we're investing into or sectors where the earnings disappointment chances are lesser, because I think at these level of market and stocks, where you see earnings disappointment coming, I think you will see the markets punishing them also equally harder. So I think that is what one needs to be careful at this juncture.
Okay. Mr. Patil, one more question, and that would be regarding those two runaway sectors, defense and railways. 2 lakh crore rupee market cap has become 18 lakh crore rupee market cap for these two sectors. And again, you know, in the upcoming budget, there will be certain announcements that will be made for these two particular sectors in the way of higher allocation and some more announcements. Do you think the prices right now that we have will get incrementally higher after those announcements, or are you thinking that this space could be much more frothy after the budget, as a lot more is already priced in?
Yeah, I think so. I think in the budget, we see a focus on infra and a lot of some of these sectors like railways and defense being talked about, but we don't see any major change in the trajectory of what the government has been doing in terms of the allocation over there. So I don't see any reason to be excited in the budget, okay, which can further increase allocations over there. Having said that, I think some of these sectors which you talked about, right, we have seen there's been a lot of expectations, okay, which have been there. Obviously, the sector has seen a good growth. Okay, there are, I mean, the outlook there is definitely better, but clearly the valuations of some of the stocks have run ahead. So I think we're slightly cautious, okay, as I said, in sectors where there's a huge run up and the valuations are say about 2 standard deviations above their long-term average, I think one would not want to really chase them. But so I think I would say that trying to really play, because we see in the budget, I think people tend to overreact, right, on certain narrative which is there without actually looking at the number, whether there is any meaningful change, okay, which can significantly alter the trajectory. I think one has to really look into rather than trying to just go on the narrative and try to ride some of these sectors.
Okay, getting Punita into this conversation, every day when a long-term investor wakes up, Punita, he or she feels very happy looking at prices. You know, you sleep over and you realize that the portfolio is up 0.5%. It's a great feeling, but it's also a feeling where you have to realize that profit and deploy that money elsewhere for it to make more money. Now, tell us which part of your portfolio over the last 1 month or so you've booked profit and where have you poured in that money?
As I said, I think IT, FMCG,
Yes.
right after the elections, I think that's a space that we've definitely seen more allocation to. And that, I mean, through the year, earlier this year, I mean, there has been some shift going back into quality and into more value oriented sectors, because this is a year of a lot of elections globally.
Yes.
Right? We've obviously seen elections in India, and that has resulted in not as stable a government formation as one would had hoped before election. We are seeing a lot of rhetoric and uncertainty in the US elections with what's happening with you know, the Democratic Party. So, and whether we like it or not, India's growth story is great, but flows and markets are correlated. So if there's uncertainty in the US markets, which there is right now, there'll be more volatility, and that will definitely flow to India as well. It cannot be completely uncorrelated with what's happening in global markets. So to that extent, I think there is a little bit more uncertainty in the global situation. Valuations are much higher than they have been in the past. So given this kind of a scenario, it's better to be a little bit more focused on long-term, good quality, healthy balance sheets, etc., and not be a day trader doing just FNO.
Sure, absolutely. Punita, you know, one more point that I wanted to discuss, since you talked about global markets, global scenario, you know, very well linked world. Everybody is now looking at what will happen in the US elections. Is Mr. Trump coming back, or is it going to be Kamala Harris? What do you think, and what will be better for India?
Well, I think it's a little too early to say what will happen with Kamala Harris. She's just been announced. I think there's still people absorbing that news. I mean, it appears that Trump is leading at the moment, but there is still another 4 months into the election, and so anything can happen. And whether they'll be good for India or not, I think in general, both every party in the US and India is strategically very important, and so they'll both be good to India in general. Whether one will be marginally better or not depends also on their priorities. Remember that Trump is also very focused on stimulating domestic manufacturing in the US, and that could hurt some of our exporters as it did. So the trade dynamics could change with Trump, and that necessarily may not be better. It depends on how it pans out.
All right. Well, many thanks, Punita, for being with us here in the India Today studios on Business Today Television. And thank you so much, Mr. Patil, for your time as well, helping us understand, you know, which way the budget could be shaping going forward from here. The entire day, viewers, we will be continuing to get you the top voices that you should be listening to assess how important is this budget going to be for you, for your investments. Stay tuned. The action continues in just a bit, and we'll take a very short break right here.
Sense how much of coalition dharma is likely to impact the first budget of Modi 3.0?
Thanks, Siddharth, for having me here. Let me say at the outset that the coalition politics that you talked about will definitely have its imprint on the budget philosophy that is being being executed, will be executed next week. There is no doubt about it. But let us understand also this coalition partners' economic philosophy, which are not very different from the kind of philosophy that the Modi government has been following. So I think apart from some allocation to be made to the Andhra Pradesh government, or special dispensation to be given to Bihar, or special welfare schemes keeping Bihar and Andhra Pradesh in mind, maybe addressing the Andhra Pradesh demand for some sort of a refinery to be set up, or even transfer of BPCL, a partial ownership, to Andhra Pradesh. These are some of the things that will definitely will see reflected in the coming budget.
The important macroeconomic point is that there needs to be a very clear continuation of this policy where infra investments continue to pump prime the economy. And therefore, I am expecting that on the basis of the last full year budget, I'm not talking about the interim budget, which I think was just a holding operation. As the last full year budget had allocated 10 lakh crores total outlay for the infrastructure sector in the union budget. And based on those trends and based on the macroeconomic requirements, I am actually hoping that the finance minister allocates 13 lakh crores this year.
I would hope that the budget would think of certain structural mechanisms to address these concerns. I think we need much more oversight on safety. We need much more oversight on looking at the design, looking at the construction practices. So I think some or a significant part of the budget needs to focus on this.
This is going to be a very important budget because in the interim budget, the Honorable Finance Minister had made it clear that the budget that would be presented in the next term would really lay out the roadmap for Viksit Bharat, which the Honorable Prime Minister has set out as a goal for his government and for India, so that we can have a developed country by 2047. The roadmap for this is going to be laid out in this budget.
I think the government is in a very, very comfortable position. You will be in a position where you can reduce the fiscal deficit by 1 lakh crores or even more, because 1 lakh crores is just what the excess which RBI has given. There will also be money coming from other public sector financial institutions. That's one. You could also be spending it on social welfare schemes. Third, you could also be giving income tax concessions, something which is required if you want to spur consumption and savings. It will not be a big amount, but something which is definitely required.
I think there's also an underpinning of the tax buoyancy which is coming through with the finance minister, which means that the government's tax collections over the last year have been quite robust. And therefore, a number of reforms that took place in the previous years are showing results which are enabling the fiscal space for the government to be able to be more considerate towards the taxpayer community.
What's your own sense? How much of coalition dharma is likely to impact the first budget of Modi 3.0?
Thanks, Siddharth, for having me here. Let me say at the outset that the coalition politics that you talked about will definitely have its imprint on the budget philosophy that is being executed, will be executed next week. There is no doubt about it. But let us understand also this coalition partners' economic philosophy, which are not very different from the kind of philosophy that the Modi government has been following. So I think apart from some allocation to be made to the Andhra Pradesh government, or special dispensation to be given to Bihar, or special welfare schemes keeping Bihar and Andhra Pradesh in mind, maybe addressing the Andhra Pradesh demand for some sort of a refinery to be set up, or even transfer of BPCL, partial ownership to Andhra Pradesh. These are some of the things that will definitely.
Warm welcome to Business Today Television. This budget day, I'm Siddharth Zarabi, and with me my colleague, the editor of Business Today, Sourav Majumdar. You're watching Modinomics 3.0. Just about an hour left for Finance Minister Nirmala Sitharaman to present her 7th Union Budget, a record, as well as the first budget of Prime Minister Narendra Modi's third term. Lots of expectations as far as this budget is concerned. What will it do for the implementation of the Viksit Bharat 2047 vision? How will it boost sectors of the economy that need support even as it maintains fiscal discipline? What about the demand for changes to income tax as far as individual income taxpayers are concerned? What about many other demands that have come up in the run-up, including the political demands from states like Andhra Pradesh and now even Odisha, in addition to Bihar? On today's budget special coverage, I am joined by several guests. Sajid Chinoy, the Managing Director and Chief India Economist at JP Morgan. Very warm welcome to you, Sajid. Thank you for making the time. Abhik Barua, Chief Economist at HDFC Bank. Always a pleasure to have you with us. And Shankar Iyer, Political Economy Analyst, author and columnist. I will come straight to Sajid with that one question. Set up the macro backdrop of what the budget should really be all about as far as India's economy is concerned.
Thanks very much, Siddharth. Good to be here. So I think the macro backdrop is one where there are a lot of encouraging signs over the last 18 months where you've got 3 or 4 autonomous growth drivers that have come together, right? We're seeing the government's doubling down on infrastructure. We're seeing the housing cycle, unlike China, pick up in India. We're seeing banks, balance sheets are the healthiest in a decade. So credit growth is running much above nominal GDP. And you've got, service exports that are doing very well. So that's why there's this excitement, because you've got these different autonomous drivers. Now, what's the challenge ahead? It's the fact that a lot of the heavy lifting has been done by public investment in recent years. And given fiscal and given debt constraints in the coming years, the public sector will eventually have to recede. And that investment will have to fall on the private sector's lap, which is something the economic survey, I think, repeatedly pointed out. Now, the question is, what is the binding constraint over there? The good news is the supply side constraints over the last decade, high levels of leverage, stressed balance sheets are behind us. Corporate balance sheets are very healthy. And in my mind, the constraint goes back to demand, right? It goes back to pushing up those utilization rates above 80% so that there's a trigger for more private investment. Now, this won't be easy in a world in which China is sitting on massive excess capacity. And that excess capacity is being exported, that deflation is being exported right around the world. And India is no exception to that. So the challenge before the budget is, how do you in the near term reduce deficits to ensure that debt remains sustainable over time, and yet sow the seeds for more structurally boosting demand? This will mean, what can we do on employment? What can we do on making our economy more competitive so that over time, both private consumption and exports become more durable sources of demand? When the private sector sees consumption and or exports picking up, then you have an incentive to invest, and then you get into a virtuous cycle. The last thing I'll say, Siddharth, is I think compared to February, however, the government's entering this budget with enhanced fiscal degrees of freedom. There's about 0.5% of GDP in revenues, RBI dividend and tax revenues that the government had not envisaged back in February. So you're in a sweet spot here where in theory the government can increase expenditures, possibly cut taxes, and further reduce the deficit. So you've got that extra 0.5% to play with.
Abhik, I want to come to you and then get Shankar and Sourav in as well. Sajid spoke about that sweet spot and some extra headroom available. Is therefore the government's challenge not to raise the revenues because public demands that it at least lower certain taxes?
Well, there's always a public demand to lower taxes. I think there's
nature of public, but I mean, there are other, there are various, expenditures to be accommodated if we look at it from a political economy perspective. Some of the states who are where the state governments are allies at the center are demanding transfers, whether that will be a large one-off transfer or whether it will be in bits and pieces. One doesn't know, but I think there are a lot of things that need to be accommodated, and not stray from this path of providing support to public investments until there are more definitive signs that private investment picks up. So I don't think the additional sort of headroom created by the large dividend from the RBI and a couple of other things necessarily sort of dilutes the case for aggressive revenue mobilization, and that means that the degrees of freedom in cutting taxes is limited. And broadly, our tax GDP ratio is low, and we'll have to sort of keep working towards it. A lot of it depends on the efficiency of the tax collection mechanism, but rates do play a role. I think if I could sort of just add a little bit to what Sajid was saying, and I absolutely sort of concur with his diagnosis of the macroeconomic situation and the challenges going forward. I think one of the things that the economic survey yesterday brought up, and here are some of the more difficult trade-offs that are involved in going forward, is how we treat China. There are the political issues, security issues. On the other hand, on the one hand. On the other hand, you have this problem of not being able to, with China sitting on very large manufacturing capacities. If you don't kind of plug into the China supply chain and kind of stay away, how much traction can you get on exports?
Okay.
So I think there are very, very difficult choices to be made going forward. Maybe the budget will not address all of this. After all, it's sort of a bit of a short-term fiscal document, but it does have sort of a vision that it invariably presents. And I hope some of these difficult challenges are kind of alluded to, at least in today's budget.
Sourav, the point that Abhik makes, that he hopes that the government does not stray from the path of driving capex to lift the economy. You agree with that? And the signs from private sector investment growth, do you think we'll hear Nirmala sort of indicate the roadmap where the heavy lifting is not only done by the government of India?
Well, Siddharth, if you see what the economic survey said yesterday, clearly it talks about private sector now having to step in more and more and more across the chapters. Across chapters, it talks about the private sector and its role. Having said that, I think, like Abhik said and Sajid before him, I think there is a certain leeway which the finance minister has in terms of giving, striking a balance between capex, which I don't think, if I remember the finance secretary giving us an interview in the magazine not very long ago, where he said it's probably, reached its peak, how much heavy lifting the government can do. Yes, because, there might be a little more, but I don't see. So there, and the leeway will probably have to be now looked at in terms of some welfare spending, the revenue expenditure side. So that is the deft balance. And remember, Siddharth, it is not a usual context. The budget is not being placed in a usual context. Here is a coalition government now, and there are pressures and pulls you and I are both aware of. So that is also a context which this budget will have to be mindful of.
Let me take that point to Shankar. Shankar, just a day before the budget, we heard from sources in the ruling establishment about how there is no concept of a special category that is left anymore. And we heard from the sources that no additional states are currently being granted special category status because the Constitution of India does not provide for such categorization. This is indicative because it just comes in the run-up to the budget. The broader question, Andhra Pradesh, Bihar, Odisha and their demands. Do you think Nirmala Sitharaman and Prime Minister Narendra Modi are going to use the budget as an opportunity to address them, or will it be left outside of the budget to tackle?
Well, the budget is basically a document of pious intent. I don't think the government needs to sort of specify on this aspect. I think they will take the committee approach, and then there is the Finance Commission to offshore the issue to. While the government might say that there is no such categorization of special status, the Andhra Pradesh government is walking around with the document which they say that it has some leverage on, which is the reorganization of it. Now, all of this conversation will happen till November, till the results of the next 3 assembly elections come, Siddharth. And that is where, as they say, the FNO market will open up and the hedging will sort of be called. Put and call options will play into the market.
Shankar, Shankar makes this interesting point of F&O. You brought that in because I wonder, Sajid, if we could come to you. The economic survey also made that point. The RBI and the SEBI have made this point about F&O and the risky bets that are being placed. Is there a broader message that is being sent out at the economy level by everybody concerned with regard to the markets and valuation?
I think the message, Siddharth, is that the economy has spent 10 years repairing balance sheets and the excesses of the last cycle, right? So it's taken 10 years for the economy to clean up bank balance sheets, for credit to start flowing again. Reserves have been built up. The current account deficit is benign. So we've really had to work over the last year to kind of institutionalize this macroeconomic stability. And, the job of a regulator, of a central bank, is to take away the punch bowl before the party starts. So I'm very glad that this is being flagged repeatedly, because you don't want to reach, if it's idiosyncratic risk, it's one thing. But if it reaches a certain size and volume, then we've seen from the last 20 years globally that the spillover effects can be fast, can be uncertain, and can be places you least expect. So I think it's important to, disincentivize this behavior. We don't want a situation where, having worked so hard, you've got excesses building up in parts of the system. And the issue here is what the world is seeing is very often these risks are offshored away from bank balance sheets, because the better regulated parts of the system are very closely watched. Yep. And then this goes on to, NBFCs or other entities of the system. So I'm glad that there is a unifying voice here, that when we see a buildup of risks, we need to act on it pretty quickly.
As Sourav comes in, he has a question for Abhi. I just want to try and bring up the markets at this stage. Quick look at the markets. They opened, remained more or less flat, because there were some concerns that had built up perhaps on account of any possible changes to capital gains treatment. We haven't seen any concrete information in that regard, but of course we are counting down and literally now just 40 odd minutes away. Sourav, step in.
Abhi, I just wanted to lob that same question to you about how much leeway will actually the finance minister use in terms of the RBI bonanza which she has got, the tax buoyancy, the tax collections having been better than expected. What are the things you think she will do in this budget in terms of propping up consumption demand and also trying to ameliorate rural distress?
Well, I think very clearly there is room for more welfare spending, and either in existing programs, increasing allocations. For instance, if you take the support that that the government gives farmers, which is just 6,000 rupees a month, I think there is a strong case, given inflation, given the increase in agricultural inputs, to increase that. I'm sorry, I said 6,000 a month, it's 6,000 a year. So, I mean, you can do it through existing schemes, you can sort of bring in new schemes, and I think the need of the hour and for the foreseeable future is better quality spending and more allocations to sectors like health and education. I think we are running into a huge supply constraint in terms of effective labor inputs. I mean, we have a lot of people around, but they're not necessarily skilled. And as the economic survey pointed out, they are becoming, some segments of the population are becoming more unhealthy. So
that's something that needs to be addressed. So is welfare spending, particularly in the farm sector, and in addressing skilling, where we do have a problem with youth unemployment, and then public spending on capex, etc., might have peaked, but you have to keep the sort of the engine going, even if it's not rising further very sharply, because private investments are, my sense is that it's not, they're not going to pick up immediately. There's still some way to go. Sajid mentioned a number of 80%. I think the RBI's measure of capacity utilization indicates about 76%, and that too dominated by 2 or 3 sectors. So we do have a way to go. So it's got to be a prudent thing, and I believe that I think Shankar alluded to the fact that it will be the special status, etc., would be left to a committee and so forth. I think, given my very limited understanding of politics and political economy, there have to be some allocations in this budget. I mean, I think the allies need to want the dominant partner to show them the money, and some allocations will have to be made in the budget, maybe through existing programs where a larger share goes to some of these states. We've seen this in the case of railways, if you remember in the past, where the railway budget was used to make allocations, disproportionate allocations to certain states that had a political claim on it. So, I mean, that's the way it'll go, I think.
Sajid, can the government reduce its expenditure at this stage? This might be a counterintuitive question at this stage and given the build-up, but I really want you to tell us whether that is at all in the realm of possibility.
Siddharth, are you suggesting that they reduce the deficit even more than was planned in February?
Yes.
By cutting expenditures? I think that's possible. So there are 2 points here. One is, what does the fiscal math allow, and what is the economy demand? So I think the fiscal math allows you to, in theory, take that deficit even below 5.1 and increase expenditure and cut taxes, because you've got 0.5% of GDP. So in theory, I can increase my expenditure, I can cut taxes, and simultaneously reduce the deficit. Now, I think on the fiscal front, we have to acknowledge that it's important to reduce the deficit, but not too quickly. The fact is, last year the deficit, we did a significant consolidation. The center's deficit went from 6.4% to 5.6%. That's almost 1% of GDP, more than was envisaged. So while we all agree that deficits need to be lower in the medium term, the economy, still has some catching up to do, given its pre-pandemic path, given the fact that we need private sector demand to fill in more fully. I think it's important not to consolidate too quickly. So I think 0.5% of GDP, maybe a little bit more, is kind of what the doctor ordered at this point in time.
Okay. Before I go to Shankar and Sourav, I just want to take a look at the markets. Most indices in the red. Now, is profit being booked ahead of the budget speech? Because there was a pre-budget rally, and we've seen there's a significant move that has happened a majority of the times post budget speeches. But there you have it, the Nifty down just about 50 odd points. Take a look at the Bank X, you will see a similar kind of red, the PSU indices. So we are seeing overall, Sourav, Shankar, that the market's a bit nervous at this stage, but there's no sharp fall, and perhaps 11:05 onwards is when you will see the counters react. Shankar, very quickly to you, and I press on with that point. India is, everybody says, Sajid has written, Abhik has written in the past, that India is now at the cusp of a very long cycle of growth. And by the way, even as I say that, the first green that I'm seeing is the Nifty FMCG. So does that tell you something? But Shankar, a long cycle of growth ahead. Is today's occasion the right one for the budget to outline a strategy for implementation of that Viksit Bharat slogan, Shankaraya?
Well, they've pretty much done that in the interim budget, in the sense of how they're going to take it forward. So there is the economy will be sort of ring fenced by public investment, and we have had a very robust public investment program. Even in the interim budget, it was 11 trillion rupees. So that has been done. What is not visible to keep the growth growing is the action on the factors of productivity, which is land, labor, which is at the state level, the issues of skilling, and the education. That's why I was going to say that what I'm looking for in this budget is you could have the finance minister making everybody happy by giving out some money to the taxpayers, some money on welfare, and even though fiscal hawks will be happy if she sort of nudges it from 5.1% to 5%, which is entirely possible given the bonanza of almost 1.5 lakh crore or 1.5 trillion that they're sitting on. The question is, how imaginative can you get?
Okay.
And how can you lay? What are the issues that you can expand on? There are only so many roads and railway lines that can be done in a year. I'm not saying even for a minute that we have enough roads. We need more roads, but the execution capacity of the economy, the absorption capacity of the economy is governed by the statute of limitations. So you have to think about that. So what is the imagination? So I had suggested, for instance, that you could look at new cities. I mean, all the urban habitats are shot to hell in some senses.
Okay.
So I will be looking for some imaginative ideas in this budget to take a point further to the Viksit Bharat journey.
Okay, we seem to have lost Shankar there. One last question to Sajid before I let him go. Sajid, once the budget is done and dusted, will the key point be the cost of money and what the RBI chooses to do in the days ahead? And how do you think the budget announcements and the fiscal strategy is likely to impact the RBI's thinking?
Yeah, I think we need to be kind of cognizant of the broader point here that cyclical policy, both fiscal and monetary, have done a lot of the heavy lifting, Siddharth, as we've discussed over the last 4 years, right? That the RBI slashed interest rates in the pandemic, real rates were negative at that point in time, fiscal widened sharply. And I think, as the economic survey pointed out, we're living in a far more hostile global environment than we sometimes imagine. I think global inflation is going to be stickier. Interest rates are going to remain elevated. We've got a lot of geopolitical risks. We've got a US election. In that environment, I think it's important for India not to be adventurous. The fact is the monsoon is now catching up, but there is still food inflation remains a consistent risk. It's almost 50% of the basket. So I won't be surprised at all that the RBI is doubling down to bring inflation close to 4% and keep it there. So I think we should not expect any kind of monetary easing just as yet. Just as the fiscal needs to consolidate and ensure that debt is stable, I think the RBI needs to ensure that its primary mandate of keeping inflation low and stable is fulfilled. So we have to now look beyond these cyclical levels to what are the structural reforms that India can pursue, not just in the budget, but beyond that to boost consumption and exports. I think that's the larger thing to look forward to.
Absolutely. And Sajid, we'll come back and try and come back to you as we take this theme forward post the budget. Thank you very much for your time. At this stage, let me welcome Sunil Singhania, the founder of Abacus Asset Managers. Welcome, Sunil. There's some amount of red on the screens. Before I kind of get into a macro question, for those of our viewers who would like you to offer a spot assessment of how the markets are trading ahead of the budget.
Good morning and thanks for having me. I think, obviously in the run-up to the budget, actually we are having a very quiet market. I don't know what to make out of it, but I don't think there is anything extraordinarily positive or negative that is expected out of the budget. And we have already seen a very decent rally since the elections, So I think the markets are just sort of consolidating at these levels. I don't see anything which the market is making of the likely trend post the budget.
Sunil, overall, they've fallen from the opening highs. Benchmark indices are nearly 1% off. But the big question, and Sourav and I were discussing this earlier as well, is how would the markets respond and react to any possible changes when it comes to capital gains taxation? You've seen the kind of commentary by the regulators, the economic survey expressing certain concerns. Are the markets being prepared for some sort of tax-related intervention, Sunil?
So I think all the speculation and what will happen if this happens and that happens, I think we should not get into it because no one knows what is going to happen. So from our perspective, we are very clear, take things as it comes. However, I don't think even the economic survey spoke anything about not investing in equities. I think the only thing maybe they were bothered about was more on the speculative front rather than on the investment front. So I don't think we should make two and two and try to come to any conclusion before the budget. Anyway, we are only half an hour away. We'll know what is going to be the trend. But yes, I don't think markets are expecting any significant changes, and therefore, if it does happen, both on the positive and negative side, we might see the markets react. But at this point of time, I don't think either we or the market is expecting any significant changes.
Sunil, I wanted to ask you, from a market perspective, no news is often good news. Most of the time we've seen that if there is no negative news, the market reacts very positively and, well. What is the best thing you think will happen for the market? What is the best thing the finance minister can do which will be good news for market experts like you?
No, so you're right. When no news is there, it's normally bad news. It's normally good news. The only thing is that if there has been an expectation of bad news, then no news is good news. I don't think there has been an expectation of bad news. So I don't think no news is going to be significantly good news. We would have a status quo. Frankly, our view is that this budget is going to have very little impact on the market per se. Because as I said earlier, I don't think the market is expecting anything significantly positive or negative. From a market perspective, 2-3 things which it's well sort of talked about. One is fiscal prudence, and second is the path towards growth continuing. I think the Prime Minister yesterday at the opening of the budget session clearly reiterated the fact that the government is clearly looking at continuing and in fact accelerating the path towards growth accelerating. And therefore, I'm sure that this budget would also have some elements which would encourage that.
Okay.
Fiscal prudence is something which obviously the markets would be looking at. And again, the movement of the 10-year GSEC yields definitely helped by the inclusion in the JP Morgan bond index also reiterates that we are not seeing anything which is going to be negative as far as fiscal prudence is concerned. Okay. I think the rest is all going to be more, of the same. We already had an interim budget 6 months back, and therefore our view is that the finance minister is the same, the government is the same. We don't see any major deviation in 6 months from what the government has already mentioned.
Absolutely.
You're
totally right, Sunil, because this is, after all, a revision of the interim announcements. At this stage, let me also welcome on the show Ajay Srivastav, CEO of Dimensions Consulting. But before we go across to him, one quick point, Abhik Barua, and thank you for waiting here. Before I let you go, respond to this point about fiscal prudence. What's your best guess with regard to the kind of fiscal strategy that is likely to be outlined, not just for this year, more importantly for FY26, where sharp reduction had been earlier indicated?
I think, given everything else, I think this government has been very focused on fiscal consolidation and good fiscal management as a hallmark of their economic strategy. And I think they will indicate a preference towards moving to a long-term target of, say, 4% of GDP. And so there would be no real compromise on the fiscal consolidation path that had been set out earlier. I think it's very much part and parcel of this government's broader economic philosophy. So I unless there are, I mean, a lot more pressures, etc., from partners have to be accommodated and the entire game plan changes. I don't think the fiscal philosophy changes at all.
All right, Abhik Barua, thank you very much. We'll get back to you after the budget as well. Ajay, welcome to the debate. 25 minutes left. Let me come straight away to you and ask you, which are the couple of odd sectors that you feel are likely to benefit from the budget pronouncements? On the screen, you are seeing, only the FMCG sector that I noticed, which was in the green, Ajay.
I know people are expecting a lot of stuff from them to reduce the taxes at this point of time. I hope it comes through. I'm not sure whether it will actually happen because the definition of middle class is very different from what you and I talk about and what the government wants to think and affect them. So I think we may have a discrepancy in the thinking on that part. But certainly, I think the sectors which we believe will gain or should gain, given government pronouncements, are going to be things like semiconductor. I think government has given a big go-ahead to on the semiconductor part. We want to bring chips into India. It's a very unknown sector, very few companies in the market, so you don't see in the stock market. But I think that's going to be one big sector which will come through. Second sector, which we all see and have done very well in the market, is auto ancillaries and engineering. Because I think the PLI there would be increased allocation, and India is doing tremendously in terms of exports to Europe and buying companies in Europe. So I think PLI in auto, PLI in electronics, PLI in semiconductors, I think are three big areas that one should really see coming through. And more important than PLI, I think we are all looking at one number, which is government borrowing. If government borrowing remains where it is right now or reduces, I think that's the best positive, because today, genuinely speaking, companies can't get credit for capex projects in this country. People may find it hard to believe, but small, medium companies are unable to fund capex anymore. Leave aside the large ones. And that, if the government borrowing is restricted, more money to the market, I think we will see a lot more action in the real market, just not in the stock market.
Ajay, Sourav here, wanted to ask you, there's been a lot of talk about how to boost employment, the jobs conundrum as well. There is also talk of whether, there have been suggestions made to the government about a possible employment-linked incentive on the lines of PLI. Do you think the government, the budget will look at tweaking some sectors, adding some sectors to the PLI itself so that it can create jobs, or do you think an ELI is also a possibility?
Well, I don't think ELI is a possibility, Saurabh, because I think the government in economic survey has now led to that at least they don't believe the narrative of that employment is an issue. Whether we agree or disagree with the numbers, that's a part. And the government officially has taken a stand that we don't have an employment problem and we've done a decent job with employment. So that rules out ELI, in my view, both as an economic step, very difficult to implement, and a political step, because that's a clear acknowledgement what the opposition is saying. So ELI, I think, is out. PLI, yes. I think PLI government has been trying to focus upon textiles, where India has lost its leg in terms of export competitiveness. That could be a big one. The assembly of electronics, which employs people, really speaking, is nothing but screwdriver technology, has needs people. So I think PLI, yes. But definitely sort of ELI is going to be a political and an economic, very difficult decision to say it's an ELI plan.
That's an interesting contrast between ELI and PLI. Sunil, I'm coming to you. Right after June 4th, after the election results, we saw a shift in market preference. And therefore, the question to you is, what about PSU stocks, defense, railways? We can safely expect that the allocations indicated in the interim budget will continue, might get marginally increased. Therefore, how should an investor approach these segments?
No, to be very straight about it, I think we have been believing that the sectors are good, but stocks are pricing the moon. But over the last 2-3 months, we have been going wrong because price movement in these stocks is like being very, very firm. But we would continue to reiterate that the sectors are good, but stocks are pricing significantly, very, very high growth for a very long period of time. And therefore, on a fundamental basis, I think we would be very careful, particularly about some of the PSU defense and PSU railway names. But from an announcement perspective, I think the government is very clear. They want to focus a lot on the railway side. I think almost 25% of the capex budget goes to railways, and that's almost 2.5 lakh crore rupees. And even the defense, this indigenization of Indian defense is a story which is going to continue for a long, long time. But at least right now, the stocks are looking very expensive.
Ajay, fertilizer stocks, sugar stocks, they've been zooming ahead of the budget. Again, is this an instance of informed investment, or are just people betting on possibilities in the budget?
I don't know, informed or not, Saurav, but over the last 20, 30 years, I have never seen them giving me any returns. So yes, sporadically they wake up and they have a nice green shoot, but return-wise, both the industries have been pathetic as far as investors are concerned. So, yes, you can plan, but the real fact is, why the fertilizer industry not good for us? Because it's a government control. Everything is government controlled. Input price, external price. Now, as an investor outside, how do I predict government behavior where we know that their pro-farmer lobby pass-through pricing is not going to happen? So that rules out your investment in fertilizer. Sugar is the same thing. The moment the demand goes up and the price goes up, there is a price control on the sugar, and then they say ethanol, you can't mix the ethanol. So, so if you're invested in sugar, when the best part of the season happens, there's a government control on the pricing and realization. When the worst thing happens, anyway, you got a problem on the company. So, so these two sectors, plagued by just so much of government interference, not a stable policies, linked to CPI, linked to pricing, market pricing, stock, ethanol has gone back and forth, should be sugar, without sugar. So, how do you invest in a thesis? And as I keep saying, there is more available on the table. It's not about I have unlimited money. If I have limited money, why would I go to a sector with so much unpredictability when there are sectors available to me which are very clear path? I think Sunil mentioned PSUs. Yes, there is a froth there, but there is a growth pattern. The valuations are cheaper. One day they may get privatized. Who knows? So I've got so much stuff lying, so many new IPOs. Look at the beautiful stories coming out in terms of engineering, in terms of new sectors, in terms of chip technologies. Why would I want to go back to the old sugar and fertilizer, no matter how they look? World is so much more exciting with new companies.
The world is so much more exciting, and it is uncertain. Saurav, we have both Ajay and Sunil only for the next 3 or 4 minutes. I want to put both of them a question and then you step in. What will the market cheer the most? Sunil, that question to you first. Will it be a lower fiscal deficit and a continuing indication of consolidation, or will it cheer a slightly increased capex allocation?
No, so I'll reiterate, we have had an interim budget just 6 months back. And the budget for the capex was already increased to 11,000 crores. I don't think anything has happened between 1st of February to now for the government to say that there's 11,000 will become 12 lakh or 13 lakh crore this year. I think what the markets might like is a statement that this growth in allocation to building India is going to continue. As far as fiscal prudence is concerned, again, I think it's very natural to expect that the part towards fiscal prudence will continue. We have had a big bounty in terms of 2 lakh crores of dividend, which RBI has given to the government. So even with some socialist steps, which have been talked about in the run-up to the budget, which is increasing the allocation per annum to farmers to 12,000 from 6,000 and so on and so forth. I think despite that, the market is already building in fiscal prudence. So frankly, I think, this is going to be one of the budgets where the market movements are going to be very, very small. Maybe, going back to your point, doing what has been done over the last few years and continuing in that would be the best thing to happen.
Okay, the best thing to happen. Ajay, that very same question to you as well. What will cheer the markets and what will sort of rock them in a negative way?
I think what will cheer the market when they hear there's no change in capital gains. I think that will certainly cheer the market because a lot of trepidation is sitting in the system to say that may be tweaked around. But what we're a little more worried about is not really the capital gain, but what's going to happen on the options and future. Is there going to be a big tax coming there or some change in policy coming there either from here or RBI? Because that can change the whole dynamics of the equation in the market, irrespective of fundamentals. So with the stance of...
No, but Ajay, sorry to interrupt you there. What is your position on this? Because
and I like the use of the word position.
Position on this because Sourav and I were at the venue on Friday where the SEBI chief was repeatedly asked this question and she gave pretty detailed answers to that.
In fact, she said it's becoming a macro problem, not an investor or an individual investor
and
problem.
remember, Shail, last time when she had spoken, the markets had been rocked. So,
Yes.
Ajay, where do you stand on this? I'm not using the word position.
I stand on simple thing that we have got a robust capital market after a long time. Let people be mature enough to make investment decisions. If a 25-year-old can start a company, so can a 25-year-old buy a stock options or a future. Just because few of them make losses doesn't make the system wrong. The government job is to ensure regulation, checks, balances, and margins. I think to tell people that you're doing wrong economic decisions.
Okay.
Can you tell that to a startup guy with a 25-year-old comes an idea and says, give me 100 crore and I want to run a company? Investors cut a 100 crore check. Now, we are seeing on the other side that guy should not be allowed to take a decision on buying stock options worth 200 rupees or 500 rupees premium. I don't think it makes sense. I think what makes sense is people make informed decisions. You keep regulation in the market and ensure that it doesn't get into wrong hands. You stop illegal channels, illegal advisors, etc.
Right.
That's fine. Let people invest money. Risk is the basis of economic growth, and you can't take away risk from people. They'll go gamble somewhere else. That's all as simple as that.
Sunil, before I let you go, a quick comment on that very point.
No, I think, you can argue it both the ways. I think options and futures and derivatives provide liquidity to the market, making it healthy. At the same time, I think proper education and proper checks and balances are definitely needed.
Okay.
To some extent, you can argue that, as Ajay said, that they are mature investors or mature individuals, not investors. But particularly the fact that 80-90% of the options are actually open only for half an hour to 1 hour on the day of expiry. I think that clearly points out that it is becoming a sort of a speculative or a lottery sort of a system, where you buy something for 500,000 rupees, you'll make to 3,000 or you'll lose those 1,000 rupees. So maybe, there is a need for a proper education. There is need for proper checks and balances to ensure that, those who are indulging in this know what it is. In terms of investment, I think it's a good sign that so many Indian investors are finally investing for the long term. And I say for the long term because the systematic investment plan route is a clear model for long-term investing. I don't think there is anything wrong.
Okay.
And if banks are losing deposits, maybe the banks will have to get their business model right in ensuring that there's a balance between what they're offering to the investor and what the investors want.
I am so glad, Sunil, you made that point, because yesterday on India Today, I went out on a limb and said the onus should be on the banks to raise deposit rates and the government to look at how it treats the interest on fixed deposits. It's exempt only up till 10,000. Do some changes there and maybe bring parity for fixed deposits on with mutual funds. But Sunil, I know I have to let you go. Thanks very much. Try and connect to you after the budget. But Sourav, taking this point forward, State Bank of India chairman and the banker to the government of India has made this point that please reduce this differential because it is impacting deposit mobilization. Mutual fund tax treatment happened long back because it was then aimed at encouraging the mutual fund market. Is it time to encourage savers of fixed deposits, boring fixed deposits?
I think you have been harping on the word boring. So let's it's hoping that the government will look at this and make it more interesting, because it's a fact, because even leading bankers have said we are turning from a nation of savers to a nation of investors, which is right, which is good. But if you are turning from a nation of savers to a nation of speculators, that becomes a big problem. So if you want to make bank deposits more interesting, you need to bring down the differential between the deposits and mutual funds. That's a fair point.
And so if we are going to be joined by Sanjeev Puri, leading voice of industry, the chairman and managing director of ITC Limited, and the president of India's largest industrial grouping, the Confederation of Indian Industry. But even as he comes in, I wonder if Ajay is there. Ajay, do you sense some ideological sort of gambit here? If Ajay is still connected with us, can I ask him that question? Okay, we don't seem to have, we don't have Ajay, but we are also joined by Dr. Janmejay Sinha, Chairman of the Chairman India of Boston Consulting Group and Co-Chairman of CII Economic Affairs Council. Both of these industry guests joining us. Dr. Sinha, right, 10 minutes left. What is your biggest ask from this budget that you hope Modi 3.0 delivers on?
You know, I want to be boring. You know, if you go for an operation, what you want the doctor to come back and say is that it was uneventful, it was successful, and the patient is doing well. That's all that I want. I want a continuity of the policies that we have had, a tightening, you know, conservatism with fiscal deficits, you know, with consistency with tax, you know, looking at tariffs and continuing to spend on infrastructure. These are my expectations and wishes. I have a hope which may go unrequited, but it is on a focus on water, which I wish starts to get the attention it deserves, because it will help in a number of areas with agriculture and other places, but also the fact that we consume 1/3 of the what the G7 consumes in water and below what the overall world average is, and it's going to get worse. So water requires desperate attention.
Dr. Sinha,
that would be my
Dr.
wish,
Sinha, we are also joined by Sanjeev Puri,
expectation.
because just around 8 to 9 minutes left. Sanjeev Puri, the FMCG sector seems to be the only one. Sanjeev Puri, if you can hear me, this is Siddharth Zarabi from the Business Today studios. The FMCG sector seems to be the only one in the green at the moment. From your point of view as CII, are you hoping that this budget delivers an impetus to consumption, particularly rural consumption?
So, you see, let me answer it in two parts. You know, first of all, I think this whole economic transformation that is happening, and you're seeing the growth in the economy, jobs are getting created. So this is no doubt going to have a positive effect on all sectors of the economy. So we're looking at, as my colleague just said, we're looking at continuity there. We're looking at building on the good work of reforms that's happened in the past. The idea is really to look at some other sectors that can deal with higher, labor intensity, be it apparel, toys, tourism, wood related. The idea is to also look at the next set of reforms so that and a lot of that actually fall towards the state. So how can we kind of build a consensus around that so that further acceleration in the growth momentum can be looked at? So that's really one part of it. I think the part what my colleague was alluding to it. The second is, I think, and to some degree, I would say a bit to provide some relief to the middle class, maybe by way of income tax at the lower end, by way of certain enhancement in the amounts that are done through either Manrega or other direct benefit transfer mechanisms, to provide some, a bit of relief at that end. So really, two parts of it. And when we are talking of the relief, I would say that a lot more focus on rural, maybe as we are talking about public capex, higher indexation towards rural. These would be the important factors that we would look at. Having said that, we also need to address the risks in the economy, which is really to do with extreme weather events.
Yes.
Again, my colleague spoke about water. We do need to address that. We need to deal with adaptation on a larger way, because extreme weather events are multiplying and they pose risks to agriculture, they pose risks to economic activities. So broadly, I think these would be the areas which largely reflect most of it, continuity of what's happened in the past, that will build the momentum and will be good for all sectors of the economy.
Mr. Puri, Sourav here. You spoke about jobs, but the economic survey yesterday has also outlined AI as a positive and yet a negative in terms of what it can do in terms of losses for jobs. How is corporate India, particularly organizations like yours, CII, how are they looking at it? Because that again can lead to an exacerbation of the demand conundrum, right? So how is this whole AI debate? What is the corporate India stand on that?
See, let me just add to that. You know, just like AI, I also think energy transition has its risks also, because there needs to be a systems transition. When we talk about any of the sectors like the energy sector, there has to be a systems transition. When we talk about EV, it's a whole system that is transitioning. So all of these do pose, they have their pluses and they do have their risks. Similarly, AI. Now, I think we have to devise our roadmaps to leverage AI and make it an advantage for India, because India has a demographic talent to be the powerhouse of AI for the whole world. And similarly, we need to design our pathways for the transition so that at a larger level we benefit from it, and rather than get impacted by the risks associated with it. So just like AI, I think similarly we also need to look at the systems transition carefully as far as energy transition is concerned, for example.
Dr. Sinha, one of the points that the economic survey made was the rise in corporate profitability pre-COVID and at present, at almost 4 times up in PBT terms. And government policy makers say that the issue of consumption is also to do with rising prices. Is that a fair point according to you?
It's a very good thing that the corporate sector profitability has risen and that the banks are in good shape. The fact that prices are rising, are they rising ahead of inflation, and to what extent? Actually, there have been this is an advantage. A strong corporate sector is an advantage. And once the capacity utilization starts to rise, and there is a lot of interest already, capex spending starts with it. So I don't think we should minutely go into our prices rising. That's the kind of micromanagement that the economy does not require. We should be happy with the strength of our corporate sector right now.
Okay, we should be happy. I completely agree with that. And remember 2019 when corporate India got a big tax break, less than 3 minutes left for the official start. Parliament is a far more combative place, Sourav, these days, and we saw that even during Prime Minister Modi's reply to the President's speech, and Prime Minister Modi reflected on that as well.
Yesterday.
And I think the broader political economy impulse, Sourav, for this budget and beyond that, and our lawmaking, including economic policies, will be the government versus opposition face-off. So I'm hoping that at least the budget speech is listened to carefully, that it does not get...
Also, Siddharth, the interesting point is while Dr. Sinha and others say that, a normal is boring, but normal is what they expect. Let's have continuity, let's have the, way forward for reform. It's also important that the Prime Minister has emphasized and that this will be a budget which will set out the path for Viksit Bharat. So we will have to see what are those 5 or 6, and in fact the economic survey yesterday spoke of 6 key areas, including MSMEs and the rest of it, where they need to really focus on. So I'll be very keen to see what are those 6 areas and whether the budget touches upon them and how.
Dr. Puri, Mr. Puri, just one quick point as President of CII to you, sir. This whole debate around private sector investment not picking up, although there are signs and data that seem to suggest that is happening. What is your view? Is private sector investment now on a takeoff path and capacity utilizations improving?
Absolutely, and that's why you're seeing investment in the private sector. We are seeing that the investment rate is now higher than what it was pre-COVID. And what we are also hearing from the internal surveys that CII does amongst members, that capacity utilizations are at 75% or thereabouts, which are the tipping points where fresh investment starts to happen. And I think the general survey is optimistic, so I think investments will happen. But I think given the number of jobs that we have to create and the opportunity in the Indian economy, I think more needs to be done, and to unlock that, we're really looking forward to the next set of policy interventions, reforms in agriculture, a lot of reforms at the state level, so that the next set of potential in the economy is kind of unleashed and the economy gets even more competitive than it is today.
Dr. Sinha, even as I come to you, I'll request my producers to try and bring us live visuals from Parliament as they come in, where the Finance Minister gets ready to speak. But Dr. Sinha, this is going to be a unique opportunity, the first full budget of any government to lay out a very broad economic vision and strategy. What would you like to hear from the Finance Minister as far as the overall vision is concerned?
So I would like the Finance Minister to continue with fiscal conservatism, but be expansive with the social sector, to double down on investments in skilling and education, embedding it with technology, doing the same with healthcare, and looking at some of the environmental threats that are coming with a focus on water. And I would also like to see the building of the middle with the SME. You know, we have the SME and then we have the ME, you know, and we need the middle. And so any skilling, etc., which even the economic survey talks about, will be very good. But the one thing that the economic survey has said, which has delighted me, has been that the government should do less but do it better in the states. And that is a really welcome thing coming in the economic
On the screens for you viewers is Lok Sabha Speaker Om Birla. Let's try and get that audio up even as we speak. And we'll try and continue this till the moment the Finance Minister stands up. Sourav, this is the formal part of it. And very clearly, for the markets, we've heard a host of experts say, please don't rock the boat. Corporate India is also saying the same message. You've already given us a message in the interim budget. We believe in you. You've been fiscally conservative. Would there be anything, Sourav, which might spoil the mood terribly according to you?
You know, I think you know, this whole discussion around markets, F&O, if you really put some kind of a really prohibitive tax on markets, then that will really rock the boat. If fiscal conservatism is deviated from, which I think is a very unlikely you know, possibility, because the government has really pushed its might behind it. So I think this is the first time I am seeing a chorus of let's have it normal. Let's have it continue.
No one's mentioned dream budget. No one is saying, you know, make or break it.
Expectations, you know, I remember Dr. Bimal Jalan, the RBI governor, famously said his job was to manage expectations. I think expectations have been beautifully managed.
Mr. Puri, some foreign visiting dignitaries are being introduced by the Lok Sabha Speaker. That gives me perhaps another 30 odd seconds with you. You know, the whole 10 years of Modinomics has been big bang structural reforms in the first 5 years, followed by supply side interventions and the management of COVID. What should be the big third term strategy according to you, if you were to put it into a few words?
Okay, besides building on what is already being done, I think we have to look at the next set of factor reforms, agriculture, power, land, labor, which are of course something that where states need to do a lot more. So that's one important area to look at. The other area to look at is really...
Okay, the Finance Minister is up and speaking. Let's listen in.
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I am happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oilseeds. For achieving self-sufficiency in pulses and oilseeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oilseeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the 4th scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. "1,000 industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs. Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. e-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice, saturation approach. Our government is committed to all-round, all-pervasive and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata industrial corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas B, Virasat B in our growth trajectory. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. Women-led development. For promoting women-led development, the budget carries an allocation of more than 3 lakh crore for schemes benefiting women and girls. This signals our government's commitment for enhancing women's role in economic development. Pradhan Mantri Janjatiya Unnat Gram Abhiyan. For improving the socio-economic condition of tribal communities, we will launch the Pradhan Mantri Janjatiya Unnat Gram Abhiyan by adopting saturation coverage for tribal families in tribal majority villages and aspirational districts. This will cover 63,000 villages, benefiting 5 crore tribal people. Bank branches in northeastern region. More than 100 branches of India Post Payment Bank will be set up in the northeast region to expand the banking services. This year, I have made a provision of 2.66 lakh crore rupees for rural development, including rural infrastructure. Priority 4, manufacturing and services, support for promotion of MSMEs. This budget provides special attention to MSMEs and manufacturing, particularly labor-intensive manufacturing. We have formulated a package covering financing, regulatory changes, and technology support for MSMEs to help them grow and also compete globally, as mentioned in the interim budget. I'm happy to announce the following specific measures. Credit guarantee scheme for MSMEs in the manufacturing sector. For facilitating term loans to MSMEs for purchase of machinery and equipment without collateral or third-party guarantee, a credit guarantee scheme will be introduced. The scheme will operate on pooling of credit risks of such MSMEs. A separately constituted self-financing guarantee fund will provide to each applicant guarantee cover up to 100 crore rupees, while the loan amount may be larger. The borrower will have to provide an upfront guarantee fee and an annual guarantee fee on the reducing loan balance. New assessment model for MSME credit. Public sector banks will build their own in-house capability to assess MSMEs for credit instead of relying on external assessment. They will also take a lead in developing or getting developed a new credit assessment model based on the scoring of digital footprints of the MSMEs in the economy. This is expected to be a significant improvement over the traditional assessment of credit eligibility based only on asset or turnover criteria. That will also cover MSMEs without a formal accounting system. Credit support to MSMEs during stress period. I'm happy to announce a new mechanism for facilitating continuation of bank credit to MSMEs during their stress period while being in special mention account, SMA stage, for reasons beyond their control. MSMEs need credit to continue their business and to avoid getting into the NPA stage. Credit availability will be supported through a guarantee from a government-promoted fund. Mudra loans. The limit of Mudra loans will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed and successfully repaid previous loans under the Tarun category. Enhanced scope for mandatory onboarding in trades. For facilitating MSMEs to unlock their working capital by converting their trade receivables into cash, I propose to reduce the turnover threshold of buyers for mandatory onboarding on the trades platform from rupees 500 crore to 250 crore rupees. This measure will bring 22 more CPSCs and 7,000 more companies onto the platform. Medium enterprises will also be included in the scope of the suppliers. SIDBI branches in MSME clusters. SIDBI will open new branches to expand its reach to serve all major MSME clusters within 3 years and provide direct credit to them. With the opening of 24 such branches this year, the service coverage will expand to 168 out of 242 major clusters. MSME units for food irradiation, quality and safety testing. Financial support for setting up of 50 multi-product food irradiation units in the MSME sector will be provided. Setting up of 100 food quality and safety testing labs with NABL accreditation will be facilitated. E-commerce export hubs. To enable MSMEs and traditional artisans to sell their products in international markets, e-commerce export hubs will be set up in public-private partnership mode. These hubs, under a seamless regulatory and logistic framework, will facilitate trade and export-related services under one roof. Measures for promotion of manufacturing and services. Internship in top companies. As the fifth scheme under Prime Minister's package, our government will launch a comprehensive scheme for providing internship opportunities in 500 top companies to 1 crore youth in 5 years. They will gain exposure for 12 months to real-life business environment, varied professions, and employment opportunities. An internship allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. Companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
Veggie paper, no. Please, Petty.
Rental housing. Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework, and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5, urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle-class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. Stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource-efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Viksit Bharat. Towards that pursuit, our government will partner with the private sector for 1. Setting up Bharat Small Reactors, 2. Research and development of Bharat Small Modular Reactor, and 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment-grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavor to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations, which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs, stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad Temple at Gaya and Mahabodhi Temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad Temple Corridor and Mahabodhi Temple Corridor will be supported, modeled on the successful Kashi Vishwanath Temple Corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists and Jains. The 20th Tirthankara Muniswarata temple in the Jain temple complex is ancient. The Saptarishi or the 7 hot springs form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector-driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with the states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land-related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Services to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of e-Shram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship related reforms, financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics. For improving data governance, collection, processing and management of data and statistics, different sectoral databases, including those established under the Digital India Mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I am happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavor will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavor to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a 3-fold increase in domestic production and almost a 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of custom duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp, and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. Leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals. Steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. Trade facilitation. To promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the finance bill by simplifying the tax regime for charities, TDS rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and TDS. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% TDS rate on many payments is being merged into the 2% TDS rate, and the 20% TDS rate on repurchase of units by mutual funds or UTI is being withdrawn. TDS rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending an appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise and service tax in the tax tribunals, high courts and Supreme Court to 60 lakh rupees, 2 crore rupees and 5 crore respectively, with a view to reduce litigation and provide certainty in international taxation. We will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals. To improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
Well, that was the first budget of Prime Minister Narendra Modi's third term, and income tax changes announced, but income tax changes for the salaried, personal income tax, and for the markets, two different sets of decisions. The first big key takeaway, the government has finally done some changes as far as slab rates are concerned and standard deduction in the income tax regime, but that is applicable only to the new tax regime, which is the zero exemption regime. On the other hand, capital gains tax for markets have been changed, and that has led to a sharp cut on the markets. I have with me Sourav Majumdar, editor of Business Today, and our chief markets editor Shailendra Bhatnagar. Shail, I'll come to you for a quick take on what's happening with the markets as the finance minister has announced those tax changes.
Well, Siddharth, after a 2,000-point rally in the last 7 trading weeks, we've seen lots of profit booking happening, and the worst that the market was expecting, hoping that it would never happen, has come in place. Long-term capital gains tax has been increased to 12.5% versus 10%. Short-term capital gains tax has been risen to 20% versus 15% earlier. And to curb F&O speculation, the securities transaction tax has been doubled to 0.02%. Nifty down 1.3%. Sensex has shed 831 points. Nifty Bank is 500 points lower. And across the board, you see a very sharp sell-off happening, especially in the small cap index, now down 2.7%, about 500 points lower.
Shail, if we go through some of the sectors, let's try and bring up the consumption FMCG sector that was rallying in the green prior to the budget, and I wonder how that's doing. FMCG a standout still, but Shail, what would this end up doing? Because the finance minister also announced a revenue foregone figure of 37,000 crore, which means 29,000 crore is what the government says its revenues will go down by from direct taxes and 8,000 crore by indirect. But the number that it hopes to get from this enhanced capital gains on the markets has not been disclosed. So very clearly, is this a move to reduce some sort of speculative activity on the markets? Because it can't be just a revenue realization measure.
Siddharth, from what I understand in the F&O space, that's an addiction. So unfortunately, we have this upon us that the tax on this addiction has gone up. Now, whether that will curb this addiction, I don't know. I mean, we've already seen over the last 30-35 years how increasing tax on cigarettes has not resulted in cigarette consumption going down.
Okay, Sourav, come in on that. What do you make of this? Very clearly, there was expectation, RBI, SEBI, economic survey, and the budget delivering on that expectation, Sourav?
Yeah, clearly, because, you know, even a couple of days before the budget, the Reserve Bank of India, no less, also commented on this, and RBI and SEBI together, and you and I, Siddharth, were there at the event where the SEBI chairperson also made it very clear that she sees F&O as becoming a systemic problem rather than a individual investor problem. So I'm not surprised, because I think, unfortunately, you know, market people would be obviously hit by this, and you can see it from the way the markets reacted. But, you know, again, this has to be seen from the broader way in which it was being built up. And like Shails rightly said, addiction, you got to pay a price. Simple.
Will this impact the markets is the big question. But for a moment, I'll slip into personal income tax, direct taxes, Shail, Sourav, and please weigh in on this. I made quick notes, and I'll recall that even as we try and bring those numbers up as a graphic on the screen. New tax regime slabs. 1, 2, 3, 4, 5, 6 slabs that I heard. I will recount the rate, and I want both my colleagues to comment on that. 0 to 3 lakh income, nil. And this is after the standard deduction has gone up by 50% from 50,000 to 75,000. 3 to 7 lakhs, 5%. 7 to 10 lakhs income, 10%. 10 to 12 lakhs, 15%. 12 to 15, 20%. 15 lakhs and above, 30 lakhs. So I sense a new slab, a new categorization, a narrower band. And as you can see, the key part is almost 3 lakh is the variance except from first to second slab. But the new tax regime being incentivized, the old tax regime very clearly on its way out, Sourav, because the government is offering SOPs only if you give up your exemptions and move to the new tax regime.
I think over time it has been clear, Siddharth, that the government wants to move away from an exemptions-driven regime and incentivize those who come in with, and therefore with simpler slabs, therefore with, you know, higher, sort of standard deduction. 75,000 it's being raised to in the new tax. So the whole move over the last 3-4 years, if we've seen 3 years, it's been to move the taxpayer into the new regime, and I think this is a continuation of that policy.
Okay, let's try and get an expert view on this. I am told that one of India's foremost tax experts, Mr. H.P. Ranina, is joining us on the line. Mr. Ranina, welcome. Expectations of changes to capital gains coming true. What do you make of these announcements as far as the markets and specifically capital gains is concerned to start our conversation?
Thank you, Siddharth, for having me. I think these changes are quite cosmetic, to tell you frankly. Because while she has increased the amount of exemption from 1 lakh to 1.25 lakhs, I think that's hardly going to make much of a difference to the short-term investor or the retail investor. But, you know, the increase in the security transaction tax may have a problem and may create a dampening effect on the capital market. So I think much more should have been done as far as short-term capital and long-term capital gains are concerned. Just bringing down the rate for short-term to 20% for some of the specified assets, I don't think will really help. So my own view is that the government should have been taken bolder steps, because the capital gains tax contribution to the exchequer is negligible. I don't understand why the government is shy of giving, greater benefits for capital gains exemption. I don't think it brings much revenue to the government in any case. But it would give a tremendous boost to the capital market and to market sentiments, especially for retail investors, if the capital gains tax, in fact, I would even say is abolished as far as these transactions are concerned. And that would really help. Because all over the world, the capital gains are rarely taxed, but in India, they are big taxed, and that creates a problem. Because apart from the tax implication, you have to understand the practical difficulties of calculating the taxable amount of capital gains. That leads to litigation. There's a lot of uncertainty. When did you buy an asset? When did you sell the asset? These are all issues which can be taken care of if capital gains tax itself is abolished.
Okay, we also have Nishal Maheshwari with us. Welcome to the show, Nishal. Quick reaction on what's been done as far as the capital gains tax is concerned. Mr. Ranina here giving us his point of view and saying that this is out of tune with what happens globally. What's your first reaction? Nishal, you are on mute. Please unmute because we can't hear you.
Yeah.
Go ahead.
So market doesn't like it. Market is down 100 points at the moment. But I think basically the bigger point was basically the market was waiting for a trigger to correct. I think it's just a trigger which has happened now, but market was waiting for a trigger, and this has come through. I think in a couple of days, 2-3 days, I think market is going to forget about it basically, and it's going to be business as usual. So I'm not really worried.
Okay, Shail has a question for you. Viewers, I think Nishal has a bit of a bad line, but we'll try and persist. Shail, go ahead.
Okay, this one's coming to you, Mr. Ranina. As you've rightly said, there is always issue on how capital gains is taxed, and there are increasing litigations on this account as well. Anything out of the entire budget speech that you found positive for both the broader economy as well as the markets in general, especially the amount of borrowings as also the lowered fiscal deficit target?
Yes, coming to the first point, as far as the broader issue is concerned, the provisions of the budget are on the right trend. And certainly there are a lot of infrastructure investment to the figure of 1,11,111 crores is the same which was given in the interim budget in the month of February. So infrastructure development, of course, the capital outlay is very good. The VGF viability gap funding, which has been provided for certain projects, is also excellent. It will promote a lot of investment. But the most important thing is things like in tourism and in other factors, the government is trying to promote employment opportunities, which I think has been the critical issue as far as this government is concerned. And one of the reasons why the government did not do so well in the elections. The labor reforms have to be brought in, land reforms have been brought in. These are the crucial things which have been announced.
Okay.
But for that, she has said that we will depend on the state governments as well, because land and labor are state subjects. And unless the state governments, cooperate, these reforms cannot take place.
There's lots more in tax, including the angel tax being completely taken away. Good news for startups. Share buybacks, there will be tax on that, the income that is earned. But Nishal, to you, heavy selling in banking, railway and the defense counter. What explains that? Because the capex guidance that was there in the interim budget stays, as far as I am aware. Saurav, step in on that. Has anything been said that kind of negates the capex focus? No, these are revenue raising measures.
That's right. I think 11.111 lakh crore, the one which is there was announced in the interim budget, remains. And then the leeway she has given elsewhere, which was expected because nobody really expected a huge increase in capex.
And Mr. Ranina makes the point that capital gains will not yield to some great.
Yeah,
and the finance minister made this specific point, Nishal, that 37,000 crore is the revenue foregone. But what's happening on the railway, defense and other similar counters?
So, two things. One is, I think the market was expecting a higher allocation than 11 lakh crores basically, which was provided in the interim budget for capex outlay in the budget. So I think that is a bit disappointment that she has just maintained that at 11 lakh crores. And second thing, I think all these stocks, both the defense as well as railways, had run quite a bit basically. I think this is all profit taking.
Yes.
This is the panic selling basically, which people are doing. I do not see any reason for being panicky about it. I think in a couple of days, as I was saying earlier, people are going to just forget about it. And I think it's going to be business as usual.
But Nishal, if I may just jump in, this is Saurav here. This whole point about market being disappointed with capex not being hiked is strange, because the fact that capex has reached its sort of maximum point which the government can front load has been said earlier also by Mr. Somanathan and others. So I don't know why the market should be disappointed, given the fact that it's already 11.1 lakh crore. There's been a hike from the earlier years, and there has to be some welfare spending. Revenue expenditure is the need of the hour, which I think the finance minister in her budget has actually indicated.
No, I totally agree with you, basically. I was just telling you basically what the market was expecting.
Okay.
So they were expecting a slightly higher budget.
Go ahead.
Okay.
A slightly higher budget, and that's why I think you see some amount of reaction. I broadly see that, as I was telling you earlier, basically, the market was just waiting for a trigger, and a good amount of profit taking is happening. That's all.
Nishal, there's been a bit of a recovery as well.
Yes.
The Nifty was down 360 points at one stage. Sensex was down 1,000 points. Now what's happening, Sher?
So, Siddharth, from a low of about 24,074 on the Nifty, we are back above almost 24,320. Now, whether this is a knee-jerk reaction or a dead cat bounce, only time will tell. But the fact is that, large parts of this PSU segments, as Nishal very rightly points out, had gone up, just dramatically higher. There was just no reason for 5, 6, 7 defense stocks to trade between a PE of 45 to 70 compared with the Nifty PE of 23. You've seen rail stocks go up 4, 5 times. There is some sanity in the market that needs to come back, and this was the trigger. Nishchal is absolutely right. In 3-4 days, sanity will prevail, and you have 21,000 crore rupees coming in as monthly SIP, about 20,000 crore rupees coming from ultra HNIs, EPFO, you name it, and those money is using this opportunity to buy the dip. We've taken buy the dip very seriously, Siddharth.
Buying the dip is coming in. Saurav, as you come in, I just want to refocus attention of all viewers. The securities transaction tax, a much vilified term as far as market participants are concerned, STT on F&O hiked Mr. Ranina to 0.02% and 0.1%. This is what the finance minister said. Again, at these small amounts, is this more of a signal than anything else, Mr. Ranina?
I think it's more of a signal that try to not get into this F&O market. It's a disincentive, it's a dampener, because to some extent it is speculative in nature, and a lot of uneducated people are going into these F&O markets. So I think it is really a way of keeping it in check.
Yes, Mr.
Perhaps
Ranina,
it's good. Perhaps it's good.
Mr. Ranina, coming away from all the depressing news in that sense, can we look at some of the positives? One of the big positives is the fiscal deficit of 4.9%, which is actually accelerated from what was expected at 5.1. And she has very clearly said that, next year she will, and going forward, she will keep government borrowings on a declining path. So what are your thoughts on the overall structure of the budget, number one, and the accelerated fiscal deficit target which she has set?
The overall budget is excellent, and it is on the right trends. You see, the last 5 years or last 10 years has been continued. So my own take is that international and global investors will look upon this very, very positively. And if she has said that in the fiscal year 2026, she'll bring it down to 4.5, this is something which will really ensure that we will be upgraded by all rating agencies.
Yes,
absolutely.
Yes.
And a lot of money will flow into India as far as foreign capital is concerned. So I'm very happy with this fiscal consolidation.
Mr. Ranina, although I feel, as chairperson of PwC India, Sanjeev Kishan also joins in on the debate, I think some of the reaction, Shail, Saurav, on the capex heavy counters, the railway, the defense and other associated stocks is also because of this fiscal consolidation strategy that has been outlined. So basically what is the government saying? What they had said in the interim budget, they will stay on it because also of the RBI's bonanza, because tax collections are higher, and therefore was this kind of sharp fiscal consolidation required for maintaining the growth momentum on a year-on-year basis? Saurav, Shail, we know how growth is projected to decline, although 7% is kind of the median scenario, but from where we were in the previous financial year. Sanjeev, welcome to the show. What's your big takeaway as far as this budget is concerned?
Well, I mean, I have to say, to me, it's a very, very positive budget. Some of the tax changes notwithstanding, because I think it hits all the right notes. I mean, in my view, she said 4.9%. she could have easily done 4.8 or something like that. She could have gone lower, but for some of the giveaways, etc., which were necessary for various reasons, she could have even actually gone to 4.7, to my mind. I mean, I think that's very, very, I think it's, as Mr. Ranana was saying, I think it puts India on a very, very good fiscal path, so to speak. And I think the 4.5 North Star is very clearly established. The other good part of the budget is that wherever the money is being spent, whether it is in terms of skilling, one of the things that I've been very talking about extensively about skilling and making sure that it enables our manufacturing and services both, I think there is enough allocation which is happening out there. Then when we talk about women empowerment and women skilling, etc., there is significant amount of budgetary support which has gone there as well. Then tourism is one of the things which we have been talking about is will potentially create employment, and I think there is significant allocation which has happened there as well. We talk about our sustainability goals, and we talk about financing as a big element while the blueprint is yet to be read, so I don't know what exactly it is going to say, but they're clearly talking about a framework for moving towards that. And I think these are the things that we have been talking about, that how do we create, we want to go green, but financing is a problem. What is the framework? Can we actually have lower cost, 25, 30 bips, whatever, I don't know, we'll have to figure that out. So I think some of those are very, very good. Now, if you look at it, from a foreign investor perspective as well, when we talk about foreign direct investments getting simplified, I think that's a very good thing. The whole abolition of the angel tax, which was being looked upon as an irritant, and I do not know how much money was getting, collected, I think is also very, very good.
So,
now, when you do...
Sanjeev, I interrupt you here. One of the other items that we have not spoken about, 40% peak rate for foreign companies reduced to 35%. What kind of impact is it likely to have?
See, one, I think, like talking to a bunch of foreign investors, at times they tell us that, coming to India can at times be a bit of a steep bump, but when we come to India, it is very gratifying. Now, I think for those who already exist in India, and that's my first reaction was that for those who already exist in India, they are suffering 40% tax, they are now going to be at 35% tax. So that itself is a very big...
Sanjeev, what about that concessional rate of tax that had been announced for new manufacturing startups? That sunset was 31st March 2024. Are we to assume that has gone away? And as Sourav comes in, Mr. Ranina, if you also have thoughts on that, please do. But Sanjeev, quickly on that.
Yeah, we didn't hear anything on it, so I'm presuming that's gone for the moment. And I think I could see that coming because they were saying no employment generation is happening. It's not really helping. That was a talk in the circles.
So, Mr. Ranina, are you okay with the number of tax slabs for corporation? I'm not talking about personal tax here. Are you okay with this differential treatment? And we assume that concessional rate for new manufacturing has sunset.
Yes, and that is unfortunate. That should have been continued. There's no reason not to continue this rate. In fact, even the foreign tax, 35% in my opinion is too high. Other countries charge a much lower rate of tax. They should have brought it down. That's why I'm saying this is one budget where they should have taken the bull by its horns and gone full hog to make sure that India's climate and investment, development goes through. So foreign corporate tax, why 35%? Why not make it 30%? I think that should have been the real thing. So to give a real push. And this 22% rate for new manufacturing should have been continued.
Right. I think, Mr. Ranina, there are 4 more budgets left in this government, and and the finance minister.
I don't know if Nishchal has been.
But we don't have the luxury of time. Why wait for the next 4 years? Do it right now. What do we have to lose?
Now, talking of some big steps and the luxury of time, Sanjeev, I have a question for you. The big one, which sort of really is a major move, is the employment-linked incentives which were announced. How does corporate India look at that? What is your view on the ELI steps which have been announced by the budget?
Well, I mean, I think they're telling us that they're telling corporate India to walk the talk. I think we have been talking about the fact that there has been lack of skilled manpower. They've been talking about employment generation and apprenticeship. The need also came in from the opposition, incidentally. I think in one stroke they've addressed many of those, and they've put the onus back on businesses. They've identified 500 large corporations which they are saying should be responsible. I think it's very noble, and I think it puts the onus back on us. I don't see anything wrong in it. I think it's very, very the right approach, right thing.
And corporate India should have got a signal from yesterday where number of times the private sector was mentioned as having to take the onus forward now in the economic survey.
The one other thing which I will say is that, I think the economic survey said it yesterday, the coordination between central spending, state spending, and they've given some allocation, 1.52 lakh crores also for states to do capex, and then private sector. It has to be a triple engine kind of a thing moving towards India's Viksit Bharat agenda.
Okay, Shail, as you go to Nishchal, before that I just want to quickly introduce Andrew Holland, CEO of Avendus Capital, who's also joined us. But Shail, you had a question for Nishchal.
Yeah, Nishchal, I think one clear beneficiary of this budget is ITC. There is no additional tax on cigarettes, and this is one counter that's it's a sleeping giant that has awoken. Any view that you would have on ITC and broader markets in general? There seems to be a recovery underway.
So I think one thing basically which was being asked by the market was basically putting some money into the hands of the middle class and the consuming class, and I think with the cut in taxes, government has done that. So ITC, I think it will be a double beneficiary. One, obviously, there has been no tax increased on the cigarettes, and the other side, basically from the consumption side. Yeah. So definitely, we continue to believe basically ITC is a good stock to buy and accumulate in the portfolio.
Shail, as you ask, go to Andrew, I just want to focus everyone's attention on the real estate sector.
Yes.
Not just from the point of view of the Awas Yojana expansion, but also the fact that I'm wondering with the new tax regime, there is no home loan exemption that is going to be available. It doesn't apply to luxury housing, but there might be some impact. But please bring in Andrew to the debate.
As far as purchase of homes are concerned, especially in Andrews and Nishchal's city, people are not looking at tax breaks to buy 100 crore rupee flats. And I'm sure both Nishchal and Andrew are also in the pipeline to buy such flats.
Maybe they have already. But Andrew, come in on this. What do you make of this budget?
So, I mean, basically it's more of the same in terms of that the interim budget hasn't really kind of moved the needle. And of course, they've used some of that RBI dividend to kind of prop up the rural economy and particularly AP and Bihar. So I mean, I think the market was expecting that. So that's no negative there. Fiscal deficit's under control. So it's a more of a, I think if from a market perspective, the consumption stocks will probably be the big beneficiaries here. And of course, the tax increases. Long-term capital gains tax, I'm not really worried about. But for short-term capital gains tax, I think the kind of the companies which were kind of, I would say, kind of had that retail focus in terms of trading, obviously will be under pressure, and that lends itself down to the kind of small and mid caps favourites for the retail investors. So that would be the dampener, I would say, on this budget.
Okay. Andrew, let's look at the FMCG space. And we had this conversation 3 weeks ago where you had mentioned that there is a time correction that's happened in FMCG stocks. Valuations remain what they were 4 years ago. And here is the loan index that is up today. The Nifty FMCG index up 1.8%. They are expensive. These valuations cannot be defended. But even now, is there anything that attracts to you to FMCG stocks, and if you can take a couple of names?
Yeah, I unfortunately can't talk specific stocks, but I think that when we spoke last time, I also mentioned that within FMCG, some of this will take time to reflect in the top line. It doesn't really happen overnight. So therefore, I'd look within that theme of premiumization, because I think that's going to continue, and if anything, that's going to be helped by this budget going forward. So, premiumization in beverages. So, those companies involved in beverages, alcoholic and non-alcoholic, I think will do very well going forward. So that's the theme I would play within FMCG for the longer term growth story of India.
Okay, one stock that I'd like to mark on the screen is AstraZeneca, up about 11% now in the vicinity of 6,500 or so. I believe there are some duty reductions that have happened on some kind of cancer drugs. So maybe
three of them in fact. So Sourav, come in.
Andrew, I wanted to ask you, from as a market person, what is your sense about this whole environment was building up about F&O, with RBI and SEBI, and there was a lot of concern. And today you have the F&O taxes, just being raised by a bit, but that's dampened sentiment a lot. What is your sense? Did you see it coming, or was that a rude shock?
No, it wasn't a rude shock. I mean, I think, given what the RBI said, what SEBI have said, and even the economic policy, kind of highlighted the problem. So if you're going to talk the talk, then you have to do it. And that's what they've done. So not surprised in that they've taken this opportunity to try and dampen down the kind of speculation or trading in the markets. But it all goes back to now the fundamentals of India. So on a long-term basis, you're not worried about the long-term capital gains tax. But, for that trading, with high valuations that we have in India and first quarter earnings not looking so great, it's going to be a little bit more tougher to kind of make those gains, particularly when you're paying a higher tax.
That's right. One of the things behind this budget, viewers, and we are also going to be joined by other guests and our colleague Sakshi Batra as well, is that the State Bank of India in the run-up to the budget had said, please do something to incentivize fixed deposit savers. Now, I haven't seen any fine print, and I wonder, Sourav, if you've seen, or Shail, but Sanjeev Kishan, that question is to you. This whole build-up, that fixed deposits, bank deposit mobilization, and that being down at multi-year lows, that concern doesn't seem to, at least minus the fine print, have been dealt with by the budget. Do you think it was to be expected at all?
Well, in a primary way, it hasn't. But in a secondary way, with the disincentivization for F&O trades and speculative trades, in a secondary way, if I may call it so, it has been, right? I mean, they have also maintained the taxation at applicable rates on mutual funds, on debt mutual funds, which is what the change that they made last year. And previous to that, on insurance-linked insurance, insurance policies like ULIPs and so on and so forth. So I think they have retained all of that, and on top of it, there is disincentivization for speculative trade. So by that, hopefully, a little bit of secondary way that's come through, but not in a primary way. I mean, that's certainly. But I don't think much more could have been done, honestly speaking, because mutual fund trades are now already being taxed at full rates as FDs are. The only thing is about timing, because there you can actually, the gains accrue only when you liquidate, and in this it is on a yearly basis.
Sanjeev, sorry, Shail, you want to mark the Nifty, but Sanjeev, on the screen, I'll request my producers to stay with this, the new tax regime. Sanjeev, proposed slabs and the current slabs, see the changes. I wonder if you can see them, but basically the headline being save up to 17,500 rupees. The question I ask, for someone who is invested at peak rebate that is possible for home loan, will it make sense to move to the new tax regime? Sanjeev Kishan, before we start marking the markets with Shail and Sakshi.
Well, I think at these levels, these don't necessarily make any significant shifts. I mean, 17,500 rupees, will not create any significant. That's more from a consumption standpoint, I think, not so much from a housing finance or any such thing. I think, as Andrew was saying, that just put a little bit more money in the hands of people for consumption, nothing else.
So, Siddharth, I'll just place a small bet. I feel that the Nifty will end in the green. So, this is what by
didn't know you were a betting man.
Now this is the only bet we can place because F&O has been made costlier.
No, so is that irrational disappointment in the initial
I'll tell you
of
what.
the market?
I'll tell you why the knee jerk was there. Remember, the STT originally was placed to remove the capital gains tax.
That's right.
Right.
Yes.
Now what you've done is
you have both now,
and you've doubled STT, and you've increased capital gains tax.
So death and taxes will not leave us. But Sakshi Batra has come in, and I know as she was rushing in from another studio, she messaged to say that she has questions for Andrew and Nishchal. So Sakshi, we're going to take a quick break for 2 minutes. Go ahead with a question for both of them.
Absolutely. So first, Andrew, to you, do you think, just like how Shail has pointed out, we are going to be seeing a bounce back? We had seen that 6% crash on one day on the elections day. The next day, the markets had bounced back. Will this be also digestible in the markets?
See, I think the long-term capital gains tax will be digested, and that's not a problem. So by tomorrow, we'll go back to the fundamentals. And the fundamentals, if you look at the first quarter results, are not so great. And there's lots of moving parts globally as well. So, there's no real catalyst for the market to move higher, given the valuations we have. So, it's been more of the same. Yes, we knew that there's going to be more expenditure. So maybe FMCG is the place to hide. If your favorite stocks, which were traded very highly by retail investors, are the ones which are going to suffer, in my view.
And one point I'd just like to make, we have two tax experts on the panel. To you, Mr. Ranina, specifically, we don't know as of now what date will these new capital gains tax come into effect. So for what is earned so far, I think investors will pay a lesser degree of tax, and from now on I believe that the tax rates will be higher at current market prices. Is my thinking right, sir?
Yes, provided this is what is specifically mentioned in the budget, from which date it is to come into effect. So we have to see the fine print. But certainly what has already happened in the past, that will not be affected by the new regime.
Okay. Now, Siddharth, I just want to mark one more point, important news point for everybody as you go to Nishchal. The rupee is at an all-time low of 83.69 to the US dollar. We'll bring that up on the screen, but just mark the rupee for a moment. Sakshi, over to you.
Absolutely. Right, Mr. Ranina, I'll also get you in, and I wanted to understand from you, this, especially the STT, the way it has been increased, do you think this is going to be detrimental for the stock markets, especially the volumes, or this is the right fashion with which the concerns that were being raised by the SEBI chairperson erstwhile and in the economic survey yesterday is the right direction, the right way to curb some of the volatility and extreme frothiness that we are seeing in this space, sir?
Yes, Sakshi, the main reason is that FNO will be dampened, but that will in fact benefit the equity market. So my own view is that people will stop going to the speculative route of FNOs because they feel that the profit is much more, but now they will divert the funds to the equity market. And if they do that, I think the equity market should improve, should do better. And it's good for the retail investors. FNOs are speculative in the sense, and unless you have a very broad knowledge of the capital market, I don't think you can really make a good money on that. Many people have lost money, and that's why RBI and SEBI have been cautioning investors that please try to curtail the FNO market. But that will benefit the equity market in the long run, in the short run, in fact.
Right. Nishchal, I also have a question for you. According to some of the news points that I'm getting right after the fine print, LTCG on real estate gets reduced to 12.5% from 20% versus the asset classes now, stock markets versus real estate. Where do you think the money will go? I think you're on mute, sir. Could you please unmute yourself?
I think basically these are two different asset classes altogether. One is obviously you have very large investments when you have to do anything into the real estate. And here you can maybe do with a minimum like 5,000 rupees also. You can start with an SIP. And second thing is liquidity. So I think these are two different classes. I don't think so similar kind of investors are coming into both these classes, because if one is making these, he's very clear saying that he wants to do a long-term investment as far as real estate is concerned, and equities may be short-term also. So I don't think so it's going to impact. Yeah, rationalization across asset classes is, I think, what the government is trying to do. And that is what they have done basically when they have brought down the taxes basically for real estate.
Okay, I think, sorry.
My question to Sanjeev on a slightly broader level. Sanjeev, do you think the overall, if you look at the pluses and minuses, do you think the budget has essentially ticked all the right boxes in terms of the statement? See, please remember, the Prime Minister and the government has been saying that this is a budget which will set the stage for Viksit Bharat. Now, having said that, and it has also addressed the concerns, the immediate concerns, employment, skilling, MSMEs, at least the announcements seem to suggest. So what is your sense? Do you think, and also remember that it has done things for the allies as well, whether it is the Bihar situation or Andhra, they have done stuff for them as well. So do you think in a sense the finance minister has done this balancing act and ticked all the right boxes?
Me, certainly, Saurabh. I mean, you mentioned the MSME, and I think let's not forget it. That's been an ask of the industry because supply chains are getting impacted. They're going to get impacted by energy shifts and all that. And some of them don't have strong balance sheets. So I think the credit financing, which is going to be available to MSME, which is also an employment generator, by the way, and employment is one of the big things that we've been talking about. I think that's very important. See, let's not also forget that they have actually set up a very good roadmap. Like, I mean, we talk about land reforms and labor reforms. Those are the two things that she addressed in the budget. Okay. She said that she is going to come up with, very clear, with digitization of urban land records and so on and so forth. So all of that is being done. Even on rural side, they've done it. Even she addressed the whole labor reforms part also, which is what foreign investors at that time say that okay, because of land and labor reforms, which is a state subject, which is not necessarily a central subject, at times it becomes harder. When she's also sort of talking about a broad vision of for the financial services sector, which is of course in better health at this point in time. And then let's not also forget that when we talk about people looking at India and India investments, and I take Andrew's point that some of the most recent results have not been maybe very healthy in that sense. I think over a period of time we need to move towards, when the RBI and the government are a little bit more confident, to a lower interest regime. And that hopefully will put us on the path of enhancing private capital. See, the RBI dividend, which is there last year, which it came on the back of very high yields on US dollar bonds that we had, will continue this year as well. Because in US also, the bond rates are still very high. So we'll continue to have that cushion. So the intention is to use that cushion and provide some of these enablements and give policy statements and directions, so which by the India investment quotient goes up and involve the states and involve the private sector, and that's why I'm very sanguine about the budget.
Andrew, one quick point. Given that the budget has been digested, and you use that word, is the next signal going to be for the markets from any rate policy decisions that the MPC may take? Does the attention now shift towards that?
I still think, so I'll answer that question shortly, but